All right, traders, welcome to the free training event for algos. What we're going to look at today is understanding the core engine of the algos. What do they do? What do they not do? So you can understand how to get the most out of the algos there. We're also going to spend some time going through optimizations together. Now, I want to be clear that the goal of today's event is not to come up with amazing algo templates. Now, that may happen. And if it does, we'll absolutely take the win. But the goal of today is to show everyone how to optimize for their markets, for their time frames, so on. Because every trader is a little bit different in terms of their preferences, how they want to deploy things, trade things. You might be trading with one algo on one market. There might be another trader who uses 10 algos on 5 markets, right? So, and everything in between. So this is the idea here is to help you understand what's going to work with the algo, what's not going to work. How can you get the most out of it? Okay, so that's the goal of today. We'll spend some time going through everything here. We of course need to post our disclaimer, so let's go ahead and do that now. We can't guarantee results. I would love to be able to, but we cannot. So sometimes we come up with a really great template. It looks really amazing and you go to trade it, and sometimes it works and sometimes it doesn't. And then you got to go back to the drawing board and re-optimize. That happens. It happens. It's something that is it's part of trading and algos, right? A little bit different trading discretionally versus trading with algos. So yeah, what? No guarantees? Man, I wish. I wish. So just so like I say, we can't guarantee anything. We're not here to tell you what to trade, how to trade, when to trade, how much to trade. That is entirely up to you and your risk tolerance. Okay. All right. So what we're going to start with is we're going to go through the core engine of the algo, and we're just going to kind of go top to bottom and go through what each parameter does, starting with kind of entries and targets, and then going right down the list in terms of the available filters and money management and all that. So for that, I'm going to turn it over to Jeff and let him kind of steal some of the thunder for this event. Jeff is a really smart guy, been with the company for many years, works with the development team, helping them get everything situated, kind of access the project manager, the back end, kind of making sure that everybody's getting everything done in appropriate time frame so that we can get things launched and that they're really good. He also does a lot of research and development on what products we need to develop. So in terms of what do we need to do next? What's the next edge that we can develop for our community of traders, and what ultimately traders can benefit from? So a lot of research and into the development of these algos been very critical in most all of the algos. So yeah, so good stuff. So I'm going to turn it over to Jeff, and Jeff is going to go ahead and share his screen and kind of show us what's going on here. And Jeff, are you there?
Yeah, I'm here. I think you need to let me share, saying I
Okay.
can't share.
Yep. Let me go ahead and do that. See if I need to give you permissions.
Looks like it's working now.
Okay, cool.
Can
Yep.
everyone see my screen?
Sweet. Looks
Can
good.
you see it? Okay.
Looks good to me.
Okay. So, by the way, we have three algos that we're going to kind of highlight today. It's going to be Springboard, CWAP, and HFT. And so, a lot of the core engine features are going to be common across the three algos. Then each algo will have its own special features, particularly the signal setup, the signal rules. And I'll go through those as well. So I'm going to start with Springboard. And let's see what else can I say. So as we go through, I'm sure you'll have questions. Go ahead and put them in the chat box. I'll try to respond to them. But Jim will be here as well, kind of monitoring those. And then later we'll switch roles and he'll be doing the optimization stuff. So um, if we miss your question, ask it again, or at the end, then we can always go back and look through them. Okay. So um, let's just say a couple of things in general about how the algos are structured. So there's something called the core engine. And the core engine is basically everything that has to do with entries, stops, targets, and then all the filters. So there's time controls. Sorry about that. There we go. So time controls, money management, directional filters, things like that. So those are the core features. And then there's the signal features. So for instance, in the Springboard algo, basically what we're looking at is two main strategy components. So this is what defines a trading signal and therefore an entry. And this is a trend that is a trend within a trend that's being broken. So let's just look at minimum consecutive bars. Right now I have it set to 6. So let's look at this picture. I have a separate graph here so we can actually look at the examples. So let's go back and look at a trade here. So for instance, it says 6 consecutive bars. So that means that we have 1, 2, 3, 4, 5, 6, 7 in this case, lower highs. And by the way, in this case, we're allowing the equal highs and lows. That's checked on. So that means that double top right there is counted. If I didn't check this equal highs and lows, then it would restart the count and this wouldn't count as a signal. But because I have that set and it's more than 6 consecutive bars, then I'm getting a long signal, because the signal is once there's a sufficient number of lower highs and then we get a break of that last high, then we get a long. And it's just the opposite for a short. We'll go back and look at a short in a minute. Okay. If I set that to a larger number, it would take a larger number of consecutive lower highs. The second, and this is what's great about this algo, it's very simple. There's only two main settings that define a signal logic. So the entry offset means that, and let's actually zoom into this a little bit. Go like this, and go like this. So you'll see that I think this is that's a 1 tick. So what that's doing is it's saying I'm setting the offset of where I want to enter, because I don't want to enter on a long if it just reaches this high of this last bar. It has to exceed it by a certain number of bars. Now in this case, it's only 1, but I could set it 2, 3, 4, and then we would get an entry up, at a higher price. In this case, we met the criteria that we broke this high of this last bar by 1 tick. And I'm guessing that, let's look at something here. So that's it's 47 quarter, that's 47. So yeah, that's 1 tick, okay? So that's why we got a long signal there, okay? Now these are optimizable, and when we go through the optimization, you'll see that we can optimize over ranges of these values to find the best settings. But that's what's specific to this particular algo. The rest is going to be core settings, core engine features. So for the core engine, this is really the next section is the entries, and we can pick long or short. Long only, short only. None means that it won't take trades. Okay. We have the sizing, and that's static. Just means you pick the number of contracts. Fixed cost means you set the dollar amount of risk, and then the algo automatically calculates the lot size. And the percentage of the balance, that's your trading account. You just specify a percent of your trading balance as a risk, so like 1%, 2%, whatever. And it does the same calculation as a fixed cost, but instead of being just a fixed dollar amount, it's actually a percentage of whatever your account balance is. Okay, so that's what that is. Then you specify since I have fixed costs set here, then I've specified $500 of risk. If I had specified static, then I might say, one contract, 2 contracts, 5 contracts, whatever. Okay. And there is an option to have up to 3 targets. So this is where you set the quantities for each target, and the basis of the quantities is how you define the sizing strategy. So I could do, instead of 500 on target 1, I could do 250 on target 1 and 250 on target 2, or I could split it across 3. That's up to you. One thing we'll point out when we get to the stop losses is that, I'm sorry, the targets, is that um, the stop losses, if you're picking the algo specific stop loss method, that's bypassing the features that are standard across all previous algos. And I'll talk about that when I get down to stop losses, so you'll understand what I mean when we get there. Starting balance is just if you're using the percentage of balance as a method, then you have to give it a starting balance. Okay. Enable compounding is only applicable for the strategy analyzer because that's where we're doing backtest and optimizations there on historical data. We're not doing live trading from a strategy analyzer. So for that, if you're doing a backtest over a long period of time, then you may want to enable compounding. What that means is that, let's say you start out with $50,000 balance, but then over the course of a month-long backtest, you make $5,000 in profits. Well, if you say enable compounding, then it will take the updated account balance, including your wins and losses, your gains and losses, to calculate the percentage of the account balance here. So it only applies to this one here. Okay. Order type, market or limit. For most of these, we do market, but you can specify limit. If you specify limit, it's going to give you some additional options. It gives you an entry offset. So you can specify an offset to that limit price. Max pending order distance is, again, only applies to limit. And that means that, let's say you set your entry price, but we never, the market moves away from you by this number of ticks, then the order gets canceled. So if the market's leaving without you, you don't want to wait till it comes all the way back. It might not be the same conditions to take the entry. But again, this only applies to limit orders. Okay. So let's go back to market. Now, there is an option in these algos that when you get, let's say you're long and you get a short signal while you're still in that long position. Well, none means we just ignore that short signal. But if we say exit, that means when we get a short signal, then we'll exit the long position. And if we say reverse, that means we'll actually close out the long position and take the reverse short position. We generally use none, but it is an option that's built into the logic. Okay. Now, limit pre-order gap bars, max pre-order gap bars. This is really something that came up with some of the algos that were using more exotic bar types, for instance, Renkos. What can happen with bar types like that, if you get a big sudden burst of movement in the market that's exceeding the bar size of that Renko or the range bar, you can end up with consecutive bars that have the exact same timestamp. And what that does is it can create some anomalies in the way trades are entered. So I think you probably, for these algos, you can not worry about that too much. But if you don't want to limit what the algo does in that special situation, then you would uncheck this and then specify how many consecutive bars that have the same exact timestamp will be allowed before the signal logic is deactivated for that particular signal. Okay. Jim, I'll let you let me know if there's any questions I need to address as I go.
Yep. All good
Okay.
so far. You're
Okay.
doing great. Yep.
Now this one, allow entries on exit bars. Some algos will have a situation where you get an exit and then there's a new signal that gets generated on the same bar. And that can sometimes result in overtrading. So I generally leave that unchecked. But if you leave it checked, that means it's possible to get an entry on the same bar that you get an exit from the previous trade. Okay, so that's what that means. Okay. All right, so let's talk about stop losses. So there's two main ways to go here, and this is only applicable to some of the more recent algos, does not apply to HFT, but it does apply to CWAP and Springboard. So in some of the more recent algos, we put logic in that tied the stop loss calculation, the stop distance calculation, to the pattern that the signal is being derived from. And when you do that, then you have a specific, you have a dynamic stop distance based on the pattern itself. Now, if you want to use the traditional core engine logic, you can uncheck this. And when you do, then what you get is you get trailing stop and break even logic. And by the way, that would be for up to 3 targets. Okay. So applying to all 3 targets if you choose to use all 3 targets. So typically for this algo, we would use enable algo stop loss true. But just so you know, the way it works is if you want to use the trigger, the trail and the break even, then you specify a trigger price, then either trail by a number of bars back or by a specific tick amount. And that's what these two are. Okay. And then break even, if you put break even to a number greater than 1, then you will get the break even plus. So that means if you you wouldn't put 1, you probably put, this is I think this is ES. So you might say, after 20 ticks or after 10 ticks, let's say 10 ticks, then I want to move it to break even plus 1 if I did that. Okay. Okay, so we're going to go back to the enable algo stop loss approach, and let me explain how these work. So when we, so let me just reiterate that the enable algo stop loss means that the stop size, the distance of the stop from the entry to the stop size, stop order, it's going to be a different distance based on how the candle pattern is that generated the signal. So that's why we put this minimum and maximum allowable stop loss. And the maximum stop loss is probably not as critical. I'm sure that, if there's a huge news event and you have a giant candle, you don't necessarily want to have a massive stop size. So that's why you put a maximum stop loss here. But for the minimum, it's actually kind of important, especially for prop traders. So funding companies, um, you know, usually have a limit to the lot size you can have for whatever you're trading. And so because the stop distance is variable, and if you're using fixed cost or percent of balance sizing, that means that your lot size is going to be a function of your stop distance. Okay. So it's important to figure out what your minimum allowable stop loss should be based on what your fixed cost risk is. And the easiest way that I can demonstrate this, I'm going to go ahead and pull over a spreadsheet. Okay. Let's just look at this for a second. So let's just say that you're trading MES. So I'm looking at this number right here. So that each tick on MES is worth $1.25. And let's say I want to risk $500 per trade. Well, here are all the possible stop sizes that it could be based on what the algo is calculating for the stop distance. And for each one of these stop sizes, this is the calculated quantity. Okay. In other words, lot size. So you can see, obviously, if you have a ridiculously small stop size, like 4 ticks, your lot size is going to be 100 if you're risking $500. If your lot size is 20, then if your stop size is 20, your lot size is going to be 20. If your stop size is 30, your lot size is going to be 13. So does that help explain why we want to calculate a minimum stop size? Hopefully that's clear. So it's actually quite important to understand that, because you could wind up, if you're not careful, you could wind up with a lot size based on your fixed dollar risk that's too big for your prop firm account and might cause you to fail your eval. Okay, so that's why we put that in there. Now, for stop loss offset type, there's 2 ways to go. And what we're talking about here is, and actually, let's look at the graph. Okay, so you can see here that the setting is percent of look back range. So what we're doing here, let me get a cursor. So this is the pattern that generated the signal. Okay, so we want to take the lowest low of all of these bars right here. And that happens to be the last bar, but it could be this bar, or it could be this bar. It just depends on how the pattern plays out. But we want to take the lowest low, at least a look back of this many bars, so bars back for stop placement of 9 bars in this case, and take the lowest low, and then add an offset to that. Okay, so the offset says, well, this is the reference, and then we want to place an offset to that, and that's where the stop goes. So this is the stop here based on that. Okay. Is that pretty clear? So there's just 2 methods here. So one method is percent of the look back range, and the other is just to specify a certain number of ticks. Okay. So in this particular template, we use the percent of look back range, and we specified a 10% of the range as an offset for placing the stop. Okay, so the whole range, let me explain this. So the whole range is from here to here. That's this pattern. And we take that range and take 10% of it, and then we add it for the stop here. So that's what that means. Okay. All right. So let's move on. I'll erase that. So those are the stop settings here. Let's go on to targets. Now for targets on this particular algo, we have 3 options. We have ticks, risk reward, and ATR. Ticks is obvious. You just specify how many ticks the target distance is. Risk reward is looking at whatever the stop was calculated as a multiplier. So on this particular settings, we have 60% of the stop size as our target distance. Okay. And then the third is just ATR, which is saying we want a multiple of whatever the ATR is of the chart bars at the signal bar. Okay. Excuse me for 1 second. Sorry, I had to cough there. Okay, so one other thing to point out is that if you are using multiple targets up here, this is the entry section. So if I only have quantity 1 specified, but if I have multiple quantities, then I'm going to see, let's actually do that so we can demonstrate. Let's just say we're going to do 200 here and 200 here. Okay. So now notice that I have 3 profit targets. Okay. And all of them will be using a risk reward multiple. So I might do 0.6 here. I might do, 1.5 here and 3 there, or whatever you want, right? All right, so that's just how that works. Let's put this back to 0. Okay. Okay, so can you explain ATR calc again? So with ATR, actually, that's a good question. So let me set it to ATR. You'll notice an additional parameter when ATR, and that's the ATR lookback period. Typical ATR measurement is for 14 ticks, 14 bars back, but you can set that to anything you want. I think Jim likes to use a shorter value there. So what it's saying is on the signal bar, at that bar, like if you had an ATR indicator, added to this chart, you would see the ATR changing bar to bar. So it would be whatever the ATR is calculated at the signal bar. And actually, frankly, I think it's honestly really just the bar prior, because on the signal bar, the bar is not completed yet. It's still forming. So it'd be the ATR as of the bar prior to the signal bar. That would be a number. Let's say the ATR is like, 10 ticks or whatever it is. Then you would specify a multiplier. So this number right here is actually an ATR multiplier, and that determines your target distance. Okay, so hopefully that answers your question. Would it be possible to add a stop adjust to break even after it runs X% of the reward with fixed cost sizing? So right now, the way this is working is that it's on the first target, should be on multiple targets you can do. Let's see now. It's a good question. I think you have to Yeah. So you have to not use the algo stop loss approach for stop calculations to get the trail trigger and the break evens. Okay. And that's just how it's coded right now. Maybe at some point in the future, we'll be able to incorporate, because what you're doing is you're incorporating two different stop logics. So right now we have it separate. But remember, you can do the break even and the trails. You would just calculate your stops in the traditional way with either ticks or ATR. So that's how you'd have to do that, which is fine. Okay. Okay. So let's go back to algo stop loss. So those are stops and targets. All right. So time controls. So you don't have to trade, 23 hours a day. You can trade for whatever time period you want. So this just tells the algo when to start trading, when to stop trading. By the way, I'm Pacific Coast. So I'm West Coast. So my times are, this would be 9:30 to 1 o'clock in the afternoon on East Coast time. So just so you know, if you're looking at numbers that look a little weird. So that's the start and stop time. Exit at end time simply means that at the end time, do you want to let the trade, let's say you're still in an open position at that end time. Do you want to let that trade play out, or do you just want to close it at that point in time? So if you check this, then it's going to close the trade at 10. Okay. And ignore trade times means you just don't pay, you just trade around the clock. You don't worry about start and stop times or any of this invalid trade windows or anything. So ignore trade time is just when you want to trade the entire session, 23-hour session for futures. Now, in valid trade windows, we have three blockers. So these are blockers that basically say, I'm going to start at 6:30, I'm going to end at 10, but I want to not trade, let's say between 7 and 7:30. It's an example. So you put the times there, and then you have to enable it for that to take effect. And so it'll do, in this case, if I enable this, then it will, let me enable that. Then what'll happen is it'll trade from 6:30 to 7. It won't trade from 7 to 7:30, and then it'll trade from 7:30 to 10. Okay. And there's three different windows. So you can have three different blockers within the time window that you specify for start and end times. Okay. All right. There's another thing we can do about filtering trades. We can filter based on what day of the week it is. So if you'll notice in analysis, you can look at days of the week. So let's say you do an optimization or a back test, and it's for a month long, and you want to see, well, how does it do on each day of the week? Well, you can see on this particular scenario, Tuesday through Fridays were pretty good, but Mondays weren't so good. So maybe after you do that test, you want to disable Mondays for your trading. It's just another option for finding the best times to trade, not just the best settings. Okay. All right. So let's go back to summary. Okay. So those are the days of the week. Now there's another thing that came up, and this really came up over the holidays, where we realized we were trying to do optimizations in the early January, and realized that if you did a month-long optimization on the second week of January, you would be trading, New Year's Eve, the Christmas week, times that you might not normally be trading. And so if you want to do a longer back test, but you want to exclude certain days, you can just click this button right here. It brings up this window, and then I can add a day. I can pick like I can go back to, let's go back to, the last week of the Christmas week, and I'll add another one and add the day before that. So basically you can just add specific days where the back test or the optimization is just going to ignore that day. And if you want to delete it, you just click X. And then the way you get out of this, you just click the X on the box here. And then you'll see that changed from 2 dates to 4 dates. Okay. So that's the time and days and weeks filters. Now, the rest of this is, besides money management, are just filters that are directional. So money management is pretty straightforward. If you choose to use money management, you're going to want to check this box for reset P&L on time slot. What that means is that if you don't check that and you do a 2-week optimization, then once a money management rule is hit, it will never reset for the next session. And so you'll never get any trades. You'll get trades for the first day, and then you won't get any trades for the rest of the 2 weeks. So that's what reset P&L. So that just means each new trading session, you're resetting the P&L instead of counting it against the max goal or max loss. Okay, so you always want to check that if you're using money management. Max goal is just simply a dollar amount. Once you hit that max goal, let's say $1,000, $500, whatever it is, it'll just stop trading for the rest of that day. Same with max loss. If you hit, let's say you say $500 max loss, if it hits that $500 max loss, then it'll stop trading for the rest of the day. And the way you'll know that when you look at the chart is you'll see the bars, instead of being green or red, they'll just be grayed out. And grayed out bars means that money management has discontinued trading for the rest of the day. Okay. All right. And there's also high watermark. This is another way to do money management. So if you want to use high watermark, what high watermark means is, let's say you've been trading all day and you've gotten to $1,000 in profit. Now, you don't necessarily have $1,000 as your max goal. Maybe you're not using max goal, but you want to say that, hey, if I get to $1,000, then I don't want to start giving back those profits if the signals stop working the rest of that day. So I'm going to specify, let's just put, realized right here. And it gives you more options. So there's two things you have to specify if you're going to use high watermark. One is, at what dollar of profit does it start working? So this is saying 200. So that's saying until I get to $200 in profit, it's going to completely ignore high watermark money management. But as soon as I surpass $200 in profit, then I'm going to get high watermark engaged. And so if I do, then I have to specify a percentage here. So let's say 25%. So if I surpass $200 in profit and I get all the way to $1,000 in profit, then once I get to $1,000 in profit, sorry, I was mixing the two. So let's just rewind a second. As soon as I get to $200 in profit, then high watermark kicks in, and that says that as soon as I lose 25% of that 200, then it's going to discontinue trading. So that would be if I lose $50 after I reach 200, then it'll discontinue trading. But if it goes from 200 and I keep going and I make up to 400, then it's going to be 25% of the 400, which is 100. So it'll, once I reach $400 in profit, then when I give back $100, then it'll stop trading then. So to get high watermark working, you have to specify realized or unrealized. If you click off, then it won't be activated. And the only difference between realized and unrealized is taking into account the current trade that you're in, whereas realized is only looking at trades that have closed already. Okay. All right. Let's put this back to off. We're not using money management for this one. Miscellaneous filters is simply saying, very simple. It's saying, if I put a 2 here, that means that I'm only going to get 2 longs in a row. And then if I get a third long signal in a row, I'm not going to take the trade. I'm going to wait for a short signal. So this is maximum trades in a given direction. If I put 5, I can take up to 5 longs in a row. And if I get to a 6th long before I get a short, then it won't take the 6th long trade. Okay. And then this setting here, reset consecutive trade count on session. Let's see the whole thing. Session close. So let's say I'm trading throughout the day and I end the day with 2 long trades in a row. And I have this set to 5. Well, do I want to keep counting from 2 when the next day starts, or do I want to reset the count? So that's all this is saying is if I check this, then it'll restart the count at 0 and start counting up to 5 trades in a row starting the next day. Okay. So that's what consecutive filters, limit consecutive trades in a direction means. And then we just have directional filters. Moving averages. We have 3 types of moving average in this particular algo: EMA, SMA, and step MA. And we can pick either a single or a double. Single just means one moving average, and we're just looking where price is relative to that moving average. And then double means that we have two moving averages, and then we're looking at the crossover of those two moving averages for the directional filter. Okay. There's also an option on this particular algo for which bars we use for the moving average calculations. Primary bars means the chart bars themselves. So in this particular case, we have 1 minute bars. And so, it would just be using these bars. If I use minutes, that means it's going to use a background chart bars, or it'll load a background data feed of minute bars. And then I specify how many minutes. So this is a 1 minute time frame on this chart over here. What if I want my moving averages to be calculated from 5 minute bars? So I would put a 5 minute there. That only applies to minute basis. If I choose primary bars, then I'm only looking at the chart bars themselves. And that's generally what I use, but you can use the background minute bars. I think the HFT algo uses that method. Okay. How would I set the MA13 crossing over the 20? So what you would do there is, let's say you wanted to use, you'd set this to double. You would set EMA or SMA, whichever you want. Let's say you use EMA. You would use primary bars, and then you would set the two numbers here, period 1 and period 2. So if it was 13 and 20, you'd put a 13 here and a 20 there. Okay. Bar percent for the higher time frame AMA is simply saying that if you're using a single moving average, what you're doing there is you're comparing where current price is relative to where the moving average line is. And what if your bar, like let's say this bar right here, is halfway above and halfway below the moving average? Well, what percent of the bar has to be above in order to get the signal? That's what that bar percent is saying, is saying to use. Okay, hope that explains it. Okay, so let's go back to what it was, which was double EMA primary. Okay, all right. You just click select the colors for the two EMAs. Market structures, very straightforward. You simply pick a swing strength. Swing strength determines how many zigzags you have. Let's say, let's go over here. I think I have an example over here. Let's click, I'm just going to show the zigzags. I think this is using zigzags right here. So what you're doing is it applies zigzags to the chart bars, and then you're picking a swing strength, which determines how zigzaggy it is. I guess I don't know what the right word is, but if it's a small number, you're going to get a lot of little line segments for the zigzags. If you use a very large number, it'll only look at the biggest swings. Okay, so this is the zigzags here, and so it's a 2, so it basically is a pretty tight zigzags, and it's just looking for higher highs and higher lows in those zigzags. So like right in here, you're going to have an uptrend defined by the market structure, so it's only going to allow longs. So that's just what market structure filter does. It only allows longs when structure is up, only allows shorts when market structure is down. Now there's also a bias strip, which is, I didn't turn it on, but it's basically a graphic at the bottom of the chart here that gives you a different way to see what the structure is instead of looking at the zigzags, in case you don't want your chart to be too cluttered. And then if you want to use zigzags, market structure, you have to click require. Okay. This is swing strength. Talked about that. Including wicks is simply, do we connect the highs and lows of the wicks, or are we only looking at the opens and closes of the bars? Typically, we always use the wicks. Okay, these are the colors and just the thickness of the zigzags. VM lean is a momentum indicator. It's been an indicator that we've used a long time here at North Street. And so there's two parts to it. Let me just kind of highlight this here. You have these are the histograms, these green and red histogram bars. That's the fast momentum. And then the slow momentum are these BBs. And there's just two, it's a fast and slow momentum indicator. And so that's what you're doing here. So the original way we were using this filter was to either require VM histo bias or VM BB bias. And all that means is that we're taking longs when the histograms are above the line, the zero line, or shorts when the histogram is below the zero line, or the same thing for the BBs. We're taking longs if the BBs are above the zero line, or taking shorts if the BBs are below the zero line. But we also found that that was sometimes a little bit more lagging. And so we introduced in the more recent algos uh, a moving average of the histos. And that's what this blue line right here is the slow, and the yellow line is the fast. And these are actually moving averages of the histograms. And then when they cross over is when we would uh, take longs or shorts. So let's look at a crossover. So there's a crossover right here. Okay. It's a crossover right there. And so from here forward, we're taking longs. And then before that crossover, we were only taking shorts. And you can see that it kind of coincides with the market structure as well. But that's what the other option for using the histogram does for you as far as directional filters. Okay. And the way you do that is down here at the end of the section here. You show the histo EMA crossover, and that's what will show those to that yellow and blue line. And then you pick the look back period for each one of those EMAs. It's an EMA of the histogram. In this case, it's a 7 and a 20. You could do any two numbers, 2 and 5. It's up to you, but it will display it, but it won't require it as a filter unless you check require histo EMA crossover. So if I check this, then it will actually require that condition for longs or shorts. If you uncheck it, it'll display it, but it won't require it as a filter. Okay. All right. Um, the rest of this is just graphics and visuals, just the colors. This is where whether you want to see the racing stripes for your signals or not. Show stripes, um, data series, time frame, and this is strategy analyzers. These are not things you would see in the on the chart. So, for instance, if you go in here, then it's just going to end there at the. It's just set up and all that stuff. It's just the standard NinjaTrader strategy uh, parameters, which I don't think we need to go over here. Okay. Now, that pretty much covers all of the core engine features. And I did cover the signal features for Springboard. Jim, should I go over the signal features for the other two? Or do you think you would cover that with the optimization? I can do it,
Yeah,
or
I think we'll cover it with the optimization. I think we're going
okay.
to be kind of covering it there anyway. So
Okay.
yeah.
Uh,
Mm.
how do we have any questions about the core engine? I guess is probably the thing to ask right now.
Mhm.
Did I just blow everybody's mind? There's a lot of features, you know. You'll get to know them as you use them. I think what you'll learn as you, especially if you watch Jim do the optimization stuff, is that you don't necessarily need to use all these features. You start with as little as possible. Um, you want to start with a lot of signals, and then you want to refine it by adding more restrictions. So they're there if you need them. And if you can find a really good template without even using any filters, then you're ahead of the game. So um, anyway, just wanted to make sure that I didn't leave any questions unanswered about the core engine.
Let me bring up a couple questions that I'll answer in line
Okay.
as we're going here that I didn't get to yet. So can you use a strategy for any type of futures? Also, can you use Ninja's Renko chart? So yes, you can use any bar type. But this particular algo, you're probably going to want to use variable range bars, things like volume, tick, minute, that sort of thing. Each algo is a little bit different in terms of what you can use and what you want to use. But this particular algo can also be used on any type of futures, any market for that matter. Anything that you can trade in NinjaTrader can be traded with this algo. Again, that could be specific to each algo is a little bit different. There's some markets, some algos that you wouldn't want to run on certain items. So Jeff, why don't you go ahead and answer this one on the bar percent? What tells the algo the full bar needs to be over the moving average line? So
Okay.
that would be like the percent moving average one,
So
right?
this is only applicable for single. So it's one moving average. So I say single, I'm only looking at one moving average. It only gives me a period for one, right? There's no period two. So I'm in this case, I'm looking at a 9 EMA, and it's a 9 EMA calculated from the actual chart bars themselves. So what happens is, actually, let's go to this other here. This is where it has an EMA. So let's uh, look at this particular bar right here. We got a signal here, and let's ignore the blue line because we'd only have one moving average because we're only doing single. And so what it's going to calculate, it's going to look at the high and the low of the signal bar. Okay. And it's going to say, well, where's the entry? The entry's here. Well, I'm going to guess that's about 20%. Um, okay, let me back up. I want to explain this correctly. It's saying that the bar percent of, whatever percent you put in, let's say you put in 10% right there. Let's say you put in 10% right there. It's going to say, let me erase my drawing, start over. It's going to say that the bar has to be, what percentage of the bar is above this line right here. So let me draw here. So on this particular case, it looks like probably 90% of that bar is above the moving average line. Okay. So if I put 10%, it's going to take that trade. But if the moving average was not here, but actually, like up here, and I said 50%, then it wouldn't take that trade because not enough of that bar is above the moving average line. Okay. So does that explain it? Is that clear? That's how that works.
Do you want to go ahead and
Hopefully
go
that.
over the VM lean, the what items are what on the actual chart there? Maybe you want to expand it out and just go over what's what
Sure.
so that they can see it.
All right. So let's make it nice and big like this. Probably a good way to look at it. Let's go where we have both up and below, above and below the zero line. So start off. This is the zero line right here. Okay. So, and let's go. Sorry, I need to go back to that section in the settings. Sorry, let's erase that. Let's go down to VM lean. Let's go like this. All right, now we can do it. So do this so I can see it better. There we go. Let's start at the top. So VM histobias means the green histograms need to be above the zero line in order to take a long trade. To take a short trade, then the red histograms have to be below the zero line. That's what VM histobias means. Instead of looking at the histo, I can look at the BBs, and it's the same logic. It's just looking at the BBs instead of the histograms. So in this case, if I say BBs, then I'm taking shorts from here this way. I'm taking longs right there. I'm taking shorts again from there to there. And then I'm taking longs because the BBs are above the zero line again. Okay. So these two are simply about whether the BBs or the histos are above or below the zero line. And then what we added in more recent algos is the ability to take, because what was happening, you see what was happening, is that if you're looking at the histogram above the zero line, then you're not taking longs until here forward. But what if you're actually starting the uptrend like in here, which is before that crosses the zero line? So what we wanted to do was be able to take that long sooner. So we created a moving average of the histograms. That's what these yellow and blue lines are. They're crossing here, but that's because it's a 7 and a 20. If I made that a 2 and a 5, then the crossover might be like in here somewhere. And so we might be able to, if we got a signal, we might be able to take a signal in here long as opposed to waiting here. Okay. So the way you do that is if you enable the show the EMA crossover, you specify the two lengths, and then you require it by checking this. Now this stuff here, I mean, is there a question about these here, like all the rest of these settings? I
Yeah,
guess we
just
could
go
do that.
through like the BBs. You've got the crossover. We covered that. We covered the BBs and the histo, right?
Okay, here's one. So enable block level. You can look at the tooltip here. It says zero disable. This is the level at which to block if the histogram level is above or below. So you see these three, these are excursion levels, excursion level 3, excursion level 2, excursion level 1, above and below the line. Those are levels of overbought and oversold conditions. So let's say that in here, I'm okay taking longs here. But what if I get up here? I'm kind of overbought, aren't I? So if I want to stop trading longs way up here, then I can say, I can enter a 3 here, okay? And then that means that I get to, as soon as I get to this level, which is, corresponds to basically that bar, then I'm not going to be taking any more longs because I've exceeded excursion level 3. If I said 2, then it would use this as the criteria, and then it would stop taking longs starting there. Okay. And if I don't want to use that, then I just put it back to 0. Okay, so that's that one. Let me erase that. I'll put it back to 0. And let's look at some of the other settings. So, excuse me for a sec. Okay, VM bias type, never change this from 0 line. So this was a leftover from an older, um, we have other features that we have market structure now. This was our early um, inclusion of some form of market structure, but we have a much better market structure filter. So because of that, and to be honest with you, you should probably remove that option. But you would always use 0 line because that's just saying how are we using the VM bias, and we're using the histo bias. So just leave that at 0 line. Histogram background is simply a shading on the sub panel that's a different color based on whether the histograms are above or below the 0 line. It's just extra graphics. It doesn't do anything to algo logic. Okay. Bollinger Band, look back fast EMA, look back slow EMA. These are simply having to do with graphics for the, now let me explain something. So what we've done is we have hidden the Bollinger Band that surrounds the BBs. That was originally a part of this because it just became very cluttered. I can enable that by changing these to from transparent to a color. To be honest, it'll just cause more questions, and it's literally a graphic that has nothing to do with signal logic, so that's why we blanked it out. But it's just a holdover from the original VM lean indicator. So that's what those are. They only affect the Bollinger Band and not signal logic at all. Okay. Standard deviation multiplier, swing strength. These are all things that you probably should just leave because that's the standard settings for the VM lean. And for the things that we're looking at for the algos, they don't really affect it. Okay. But because we're using that indicator, we have to have settings in there for them. Okay. So that should be all of them. Does that clear it up?
That's
Okay.
great.
All right.
Let's see. Let me see if there's any other questions before we move on. Data series, money management with the okay. So with money management, will the algo close trades if the max daily win loss are reached? You can set it either way to be intra trade or at the end of the trade.
No. Hold on. Back up. Okay. So this is a good question. So, and this is in the user manual. It's spelled out in detail. So here's how it works. When you are trading live, what will happen is when a money management rule gets triggered, then a pop-up appears telling you which algo, which instrument, I believe which time frame, and it says, hey, you just a money management rule is triggered. Trading will be halted after this trade has closed out, and that means after it has hit either a stop or a target. Okay. Now, we initially had intra trade exits for money management. Now there's an issue that is a NinjaTrader limitation, and it doesn't happen very often, but when it happens, it can be a very big problem. And the issue is that if you have basically what happened, in order to have an intra trade exit due to money management, you have to have two separate exit orders in the logic. And with NinjaTrader, when NinjaTrader does not like having two orders for the same action that are very close in price, especially when the spread widens, which can happen at any time. There's a risk that you can hit one exit and have the other exit execute before it gets canceled. Now, what that means if that happens is that you're exiting twice, which is actually a reversal. And worse than that, you're reversing without a stop. So because that can be catastrophic, we can't have that. It's something that is a NinjaTrader limitation. And so the best solution that we have is, and that what we decided to do, is to give you a message that immediately tells you that the money management rule has been triggered. And if you're attending the algo, you can come up here to the drop down and click off, and that will immediately close the trade interbar. Okay. If you don't choose not to do that, that trade will continue until it hits the stop or the target. And the amount that differs from what that's going to result in is a P&L that is like a max daily loss that's maybe different than what you specified. So what you have to do is you have to adjust your max daily loss by reducing it by the amount of one single stop out. That way you're going to be closer to your desired max daily loss. Or it just means you're going to have to monitor the algo while it's running so that you can do that. Okay. I know that there's some people that run their algo without attending, being there to monitor it, which is certainly up to you. Just understand that if you do that and you are using money management, then you will not be there to close out the trade when that money management rule is triggered. And therefore, if you specify $500 max daily loss and your stop size is $100 worth, then you're going to have a max daily loss of 600 if it's a stop out on that last trade. Obviously, if it hits a target, it's going to be better than that. So and there's one other aspect to this, and that I just talked about live trading. If you're talking about back testing or optimization, the algo will exit the trade intra trade on a back test because it's a completely different type of data that it's processing, and it's possible to do that because the historical ticks are organized in a way where it's possible to do that. Now, the reason we did that was to give you a better idea of how to set your money management rules, assuming that you're going to be monitoring your algo if you're using money management in live trading. So, and of course, this only applies to using the money management feature, but that is something that catches a few people by surprise. It's clearly documented in the user manual, and it's just something that we had to do, even though that possible scenario is rare. That if it did happen and you're not there to monitor your algo, you could be reversing without a stop, and then you're basically naked without a protection, and that can be really bad. So that is why we did that, and that's how it works, guys.
Nice.
Does that help?
Yeah, that's very helpful. That's good. Yeah, that makes sense because I know we had changed some stuff around that, but I didn't know the exact details. So that's great. So now we know. So yeah, so you have to close out the trade. But that's
Yep.
good to have the entire depth of the information because I remember that being an issue a while back, a long time ago. Let's see, regarding optimization, we'll cover that during optimization. Which percent of differences are I'm not sure the question, so we'll cover that during optimization. So just ask again then. Don't know the algo, hard to buy another one. It's fine. We're going to go over optimizations. Doesn't have to be a previous bar.
Let me just respond to this one. There's a question about, is there a way to limit the number of losing trades as opposed to the dollar amount of loss? No, there's no way in the current code to specify a number of losing trades. It's only dollar amount.
Some of these questions are from a while ago and they're specific to what was maybe being covered at that exact time. So hopefully you've gotten your question answered. If not, then be sure to ask and we'll cover it.
I mean, maybe at the end, we'll just see if anybody has any lingering questions and we can cover them then or something.
Yeah, and we're not talking about performance and all that in this event. That's not what this event is about. Um, Yeah, so we'll cover optimizations. I'm just looking through the questions here. Do we use MACD? No, we use the VM lean, which is a velocity momentum indicator, very similar to MACD, very similar in functionality, but in my opinion, way better. I've used both and I love the VM lean. It's way more responsive, way more accurate. So
Jim, maybe I should just talk about the drop-down menu.
yeah,
Um,
yeah, absolutely.
that's actually an integral part of the using the tool. So because what triggered that was a question was, can you modify anything while it's running instead of having to disable, right? This is the reason we put the drop down menu here. Every algo has a button right here. You click it and you get the menu options. So let's say in the settings over here, let's go up here, you have long and short here, okay? So when you click the drop down menu, the long and short will be checked. Well, let's say you're in an environment where you only want to take shorts. Well, normally you would have to disable the algo, go in here, change the setting, and then re-enable it. Well, we said, well, that's just, let's have something better than that. So here you can actually change the directional bias by just clicking the drop down menu and clicking long only or short only. And then you don't have to disable the algo. You just do it right on the fly. Okay. The other thing you need to know, and this is goes back to the money management discussion. This is how you get out of your trade immediately. Click the menu button. It's 2 button clicks. Click the menu button, click off. What that will do is it will close the trade immediately, and it will also prevent further trades until you go back to long and short or long only or short only. Okay, so these are all things you can do on the fly. Okay, now there's a move stop to break even, and I'm sure some of you are probably thinking, yes, I came across an issue with that, and that is we found a bug with a recent version of the core engine upgrade, and we're working on that, and it'll be fixed shortly. What move stop to break even does is if you're in a trade and you're in a profit position, then if you hit move stop to break even, it'll just move your stop to your entry price. Okay. Well, there's a problem. There's a bug with that when you're using fixed cost dollar sizing. What it does is very simple. What it does is it acts, it's just an inadvertent bug. It's using this number as your lot size, which is really bad. That's 500 lots. So basically the bottom line is right now, until we get a fix out, do not use this button. However, you can still move your stop. And all you have to do is have chart trader on, make sure this account is the same account that your algo is trading. And then that means that you'll see the stop flags and the target flags on your chart. And you can actually drag that stop flag manually on the chart when you're in an algo trade. So you can still move the stop, just don't do it with this option right here until we fix it. Okay. And the only other thing to tell you about this dropdown is, well, there's 2 things, but you can move the stop. These 2 last settings were there before the ability to use chart trader flags to move your stop was available. So it's probably not even needed. But what this did was you could just scroll your mouse wheel to change that number of ticks. That's 10 ticks. You could just scroll your mouse wheel up or down to make that 9 or 8 or whatever ticks. And then you click move stop and it would move your stop to that number of ticks as a stop size. But now that you can use chart trader to drag your stop flags, you really don't even need to use these last 2. So that's one of the last 2 things to talk about on the drop down. The last one is the arm and disarm feature. which we haven't talked about. And the reason we hadn't talked about it, because it's this, I was using the strategy analyzer to go through the settings and you know, um, disarm mode, auto disarm mode is not an option. It's not part of strategy analyzer, because strategy analyzer is only for historical data. So if you actually, let's actually do it. Let's go ahead and go here. Let's disable the strategy. Okay. Go back and turn on disarm mode, auto disarm. So now I'm in auto disarm mode. And what that means is that when I go to the drop down, let's let it calculate here. You're going to see an arm or disarm button, an additional option. And what that means is that, see, right now it's currently disarmed. When you first enable it, it's always going to be disarmed. And when it's disarmed, it's never going to take a trade. When I'm ready to take a trade, I click arm. Now it's armed. And now it'll take one trade. And then as soon as it takes that trade, it'll go back to disarm mode. And so this is a way to use an algo as a semi-discretionary tool. You're just letting the algo do the entry, but you're deciding when to engage. And you're doing it with this auto disarm mode. You'll only see that option when you click the auto disarm option in the entry section. Okay. So
Cool.
that's
It
that.
does ignore trade time too. I don't know if you said that. I was kind of doing something else, but it does ignore trade time when you have it set to the auto disarm mode.
Right.
So
Because it's assuming you're just going to decide when to trade, not to trade. It's not looking at
yes.
time windows and all that stuff.
Yeah. So if you tell it to trade after your hours, it's going to trade after your hours.
Yes.
So you know. Good. What else? Show us example, putting data in the value and execute. That's going to be during the optimization portion. Yes. Auto disarm, satisfy Apex rules. You can actually run the algos fully automated. Yeah, I mean with Apex at least. I mean it depends on the prop firm, I suppose, but most of them, as long as you're the one turning it on and off, telling it when to trade and not to trade, and you're the one managing the risk, which is all possible with these algos, then they become, yes, they're running automatically, but you're telling it when to run. So it's not a fully closed black box, and so they're fine for trading on evals and prop firms and all that stuff. So they just don't want something that you can't control, because then what's the point? They could just run it themselves. They don't need you, right? So, yeah. Good. What else? Trailing stop. Yeah, we could review that in, we could actually, why don't we do that? Why don't we show an example of a trailing stop, Jeff? On this one, just set it to ticks, and let's show an example of maybe like three targets. Well, two targets and a trailing stop on the third entry. We'll give an example of if you want to do that, and we can show break even and all that kind of stuff too. Maybe do break even on the first entry. So yeah, either way, these algos are fine for trading evals or funded accounts. Yeah, Jeff, your mic is muted, by the way.
Sorry about that.
That's okay.
Let me start over. So, sorry about that. So we have three targets. I'm doing static, so that means two contracts for each of the three targets. So I'm total of 6 lot size. Then down here, I had to disable the enable algo stop loss. Okay, to get this exposed. In this case, I'm just doing ticks for my target distance, stop distance. I mean, so it's 20 tick stop. I'm going to trail when my profit reaches 11 ticks. I'm going to trail by, I don't know, 2 bars back. I won't use an offset. And I can even do, I mean, this might be a weird setting, but let's just show how you would do it. Let's say I want to break even when I get to 6, and I want to do break even plus 1. Okay. So what this is saying is my stop is 20. When I reach a profit of 11 ticks, I'm going to start trailing. I'm going to trail to the furthest opposing wick from 2 bars back. No offset to that bar. And then I'm going to break even once profit gets to 6 ticks of profit, and I'm going to break even +1. So it'll be 1 tick better than the entry price. Now you can see here, just to make it simple, let's make it ticks for targets. See, I have all 3 targets here. Let's say my first target is 5 ticks because I was going to break even at 6. My second target is at 10 ticks because my trail kicks in at 11. And my third target, I could leave it as 0, and that would make it a runner. So that's how you would do it. Um, should I enable this? You want to see it on the chart?
Yeah, let's see it. Let's just see what it looks
I don't
like.
know if it's going to be profitable or
I
not. Doesn't
mean, we're
matter.
not worried about that. Yeah.
Just so we can see what it looks like. Okay, let's go back and find a trade. So there's your, let's go like this. Where's the stop? There's the stop. Okay, so let's go like this. Let's actually maximize this. There, we can see it better. So that was your signal. Your stop was 20 ticks. Here's where the trailing stop kicked in because we reached 11 ticks of profit, and we actually hit our first. Where's the first target? So this is the first target. This is the second target. And the third target was a runner. So you won't see a third target line because I put the target distance at 0. If you put a target distance at 0, it becomes a runner. And so what happened was we were only trailing 2 bars back. So that's why we got taken out right here, because it's looking at the high of that bar right there. And we actually pulled back a couple of ticks and tagged it. So we exited there. So we have T1, T2, and the runner all exiting, one here, one there, and one there. And then you can see the trailing stop here. This is the break even, and then this is the trail. Does that help?
Mm-hmm.
Okay.
Looks good. Looks good. Looks good. We got a question on how often do we, I'll just type that one in. That's fine. Cool. So I think we're good on the core engine. Why don't we take 5 to 10 minutes as a quick breather, and then we'll come back and we'll power through some optimizations. Okay. So we'll just go ahead
Take 5.
and yeah, we'll take a quick break. Why don't we come back by, let's just say 3:25. Just give everybody 10 minutes to refill the coffee, the water, whatever, and then we'll be back in 10 minutes. So 3:25. Okay.
Okay. See you soon.
All right. Good stuff. Yeah, good. Glad you guys are enjoying it. This is for you guys. I mean, this is we already know how to use how to use these systems. Now we wanted to give some free training, so I'm glad you guys are getting a lot out of it. So good. Thanks. All right, so let's go through this. So what I have here is a back test that we ran on CWAP algo for the MNQ. And we took a look at it and just kind of looked at, what are some of the parameters that we need to optimize or we should look to optimize on a regular basis, and what are some of the things that tend to be kind of the standard. Okay, so first, a little bit of theory on optimization. Okay, so we'll type up some notes here. How do you optimize and all that? So first thing we're going to look at who, what, when, where, how, why. Okay. So first of all, who optimizes? You. It's your trading. Okay. You're responsible for optimizing on your markets, on your time frames, and according to your risk tolerance and according to how long you want to hang out in a trade and how many trades do you want to take and what's your max risk for the day. That is stuff that we can't answer for you. Okay. So it's really up to you. Now, when we launch, we always give a initial template that you can run with to get you started. The idea behind those templates are, yeah, if it works forever and ever and it's the greatest thing, then amazing. But the intention is to give you something to get you started. Okay. What should you optimize? This would be whichever markets you decide on. Okay, so some of you might be trading the thrust breakout algo on stocks, and it's great for that. Let me tell you, you can do that. Maybe you want to trade the springboard on Forex. You can do that. It's whatever you want to optimize for. So there's really no limitations there. A big question would be, when should you optimize? Answer depends. If you're trading, let's say a 1 minute chart to 3 minute time frame, or the equivalent volume equivalent, right? So maybe it's a volume equivalent, maybe it's a range equivalent, whatever the case might be. But at 1 minute to 3 minute, in terms of, all of that, now I'm not going to scroll and we're not looking at the settings and stuff yet. We'll get to it here in just a bit. Let's see, and we'll cover that question. Yeah, I see your question, Michael. Okay, so when should you optimize? If you're in a 1 to 3 minute time frame, you need to optimize weekly, right? You need to optimize every week. Why? Because markets can change on a dime. And what worked last week might be different this week. What's going to work next week might be different from this week. You want to optimize weekly. And my thoughts on this, if you're optimizing weekly, I would optimize 4 weeks of data. You really don't want to go too far beyond that because it's completely irrelevant. What you're looking for is, just the last 4 weeks or so in terms of optimizing. Now, if you are trading 3 to 5 minutes time frame or the equivalent, you no longer have to optimize weekly. You might optimize monthly, and you might optimize 3 months of data, and that might be your go-to. If you're on a 5 minute plus, you might still optimize monthly, but you might look at 6 months of data. Okay, so it's really, just a matter of what you're trading and how you're looking to deploy it. Where is irrelevant. How we're going to look at and why should you optimize? It's all about the Benjamins. The reason you optimize is so that you can make consistent money trading. Now, you don't want to have your equity curve looking like this, up, down, up, down. And my draw tool's not working, so let me get a different one. You don't want your equity curve looking like that. You want your equity curve to look like that. All right. You're going to have some drawdowns for sure, but you want to see that the market, ultimately your equity curve is moving up. Okay. So that is why you optimize. Algos are a bit of a different story. How are algos different from discretionary? First off, let's eliminate some of the myths that say that the algo is the trader. This is false. The algo is not the trader. You are. You're always the trader. Okay. The algo is a tool in which the trader uses to trade with. The algo is not the trader. How else is algos different from discretionary? It's less about the execution because the algo is doing all of the execution, and it's more about testing and optimizing. Okay. So you go from with manual trading, it's all about right place, right time, good execution. You got to be sharp. You got to be on your game. With algos, it's all about having the best settings possible and turning them on and off according to what's going to work. Okay. So that's a little bit different. So that kind of gives you some insight as to some of the theory behind optimizing. Okay. I'll just leave that there in case we want to go back to it. So when you look at, so now let's go into how, and this is where we're going to kind of break things down. How do you optimize? Okay, so first, start with the algo parameters. I'm going to start with the algo parameters. 2, you're going to go on to stops and targets. 3, you're going to go on to filters and blockers. Cool. That's really the rules. Now, here's what happens when you optimize. You're going to start with the algo parameters. You're going to go to stops and targets, and then you're going to go to filters and blockers. And these are going to do nothing sometimes. And then you're going to go back to the algo parameters, and you're going to go back to the stops and targets. And then you're going to go back to the parameters, and then you're going to go back to the targets, and then you're going to go back to the blockers. You're going to go back and forth. You're going to start in that order, but there is a lot of back and forth. Lots of back and forth and lots of trial and error. Now, this is going to be when you're first starting, okay, on each algo. Once you get to where you've got some decent settings, you're going to find out, we'll just kind of get it's what I call the true north settings, right? So this is kind of your, kind of your ranges, if you will. So once you have your regular settings, you're going to know, what are your variances in settings? What are your standard settings that never change? What are your time frames? Stops and targets will get locked in and they probably won't get optimized beyond that point. And then you're going to have, your select probably 3 to 10, settings that are going to be, where you have a variance to those settings, where you're going to regularly optimize those things. This is going to take probably 3 to 5 optimizations, just to be realistic. So you'll run the algo for a week, you'll back test it, you'll run it for another week, back test it. And by the time you get a few optimizations in, you're going to know what's going to work for your markets. And those will be the settings that you run with. And you'll know, okay, these are the things that I don't change, and these are the things that I change. So how do you learn those things? Practice, right? It's the same as trading. You have to practice trading with it, and that's just the end of it. Like, the settings that we come up with are not going to be settings that you can use forever and ever. If they are, fantastic, but I think the likelihood of that is very slim. Okay. The settings that you optimize are not going to be the settings that you run forever and ever. The only thing that is going to remain the same forever and ever is the actual algo strategy. So what are the entry rules? Those are going to stay the same. The code itself of the algo is we design algos that have great strategies and a significant edge. Now, that edge could be, they could be very big on some markets, but not as big on other markets. MNQ tends to work really great with CWAP on a volume chart. Crude oil tends to work really great on a minute chart because the volume is so small. So these are things that, like, you have to still be a trader to get the most out of your algos, because you have to know what works for your markets. What do you like to trade, right? So let me go back and look through some questions here. We'll kind of try to take a look. So opening strategy analyzer first is always my go-to. Then I go look at the chart. Okay, so the process of getting started, you're going to start with the algo parameters, and then we're going to go to the chart. And we're going to look at what's working, what's not working. Okay. As far as markets, it's a matter of what market you trade and what you're looking for, because the reality is, can we say that this is the only profitable template on CWAP on MNQ? No, no, it's not. Um, it's great for a 1,000 volume chart. Well, what if you trade a 3,000 volume chart? What if you trade a 5-minute chart? What if you trade a 3-minute chart? The optimizations are different. So it's a matter of what are you looking for as a trader? And some of the questions that you can ask yourself is, which markets, how many trades do you want per day? How much do you risk per trade? Okay. Um, and depending on some of these answers will help you identify how many markets do you need to trade, what time frames should you trade on, what's your risk reward preference in terms of, do you like to be all in, all out? Do you like to take multiple targets? Do you like to scale out? Do you like to leave a runner on? All these are going to be based on trader preference. So if you need, more trades, then you can size down your time frame or your fractal, and that'll give you more trades. Or you can do less filters. That'll give you more trades. So you do smaller trades. That can sometimes give you more trades. So that's, kind of some things to think about. Let's see what else. Yeah. Jeff, they're asking for that spreadsheet. If it's something that's public that we can share, feel free to share the link. I don't know if it's public or not. That might be his.
I don't have it in a Google sheet. I just have it on an Excel spreadsheet.
Okay. Cool.
Maybe what I can do, I can put that into a Google spreadsheet, and then what's the best way to share that? Just in
You just put
Discord?
it as anybody who has the link can view, and then they can make a copy of it. But
But
if there's a
where
lot
do
of
I share it?
formulas,
Like in
you might
Discord,
have to.
probably?
Yeah, you can do it in Discord. Yeah. Yeah, probably do it in the Arc Discord.
Okay, I'll do
Mm-hmm.
that.
Yeah, cool. So sweet. Okay. Let's keep going. So, these are all questions that you'll ask as a trader. So let's do an example here. So let's say trader one. This trader trades only MNQ. Trades 5 to 10 trades per day. Okay. Quick in and out. All in and out. No runners, no nothing like that. Trades for prop firms. Trades multi-accounts. Small targets, small risk, small targets. Okay. Okay. So let's say this trader has a $200 max risk per trade and can lose up to 1,000 per day. So that would be max net 5 losers for the day. So should we just automatically start with money management, in terms of optimizing? No. Money management is always last. Because if you start throwing money management at it, you're going to think you have the greatest thing in the world, and then you're going to go to trade it, and it's just probably not going to be great. And the reason I say that is because you're going to be filtering out trades that could be winners or losers, but you don't know because you haven't really seen what the edge is in terms of getting those trades on the books to see, do you even have a winning trade percentage to begin with, right? So that would be something that I would suggest doing last. Okay. Let's see. Yeah, we're gonna do a lot of sample tests. Yeah. So with this trader, they might be looking to trade, on NQ anywhere 25 to 50 ticks might be the average trade. So something like this, they're going to want to trade on a 1 to 2 minute, time frame or equivalent. Okay. So it just depends on, what you're looking to do. And then they're going to, by doing that and not having too many filters, they could look at, getting that 5 to 10 trades, but they're pretty small. Another trader might say, I get 3 trades a day on 3 different markets. I'm happy as can be. I'm done and I'm going to work. So just a matter of what you're looking for. Okay. So these are all subjectives that are based on what you trade. So this here, the 1,000 volume, how did we come up with that? Well, it was based on number of trades. It was based on the quality of the trades, plays into that as well. If you can get solid trades and get a lot of them, then that's great, especially for prop firm trading, because now you don't have to risk as much per trade. Bear with me a second. I'm still in like draw mode. Where did my draw tool thing? Oh, there it is. It was hiding. Okay, we're good. Cool. So it was based on that, and it was also based on, kind of what's working, minutes versus volume. Volume is better for MNQ. But if we run a back test on MCL with different settings, then the 3 minute was great. Let me get the right algo here. And we'll pull up CWAP and template load MCL. Okay. And we'll run this in the background while we're chatting away here and just do that. So yeah, so it's, it's going to be a matter of kind of what's working, and we can give you some ideas on, what to try and what not to try, and you're always welcome to reach out anytime. Okay. How do I know if the volume of 1,000 is correct? Well, you would just go into your analyzer and just go down to here, MNQ 1,000 volume. And I ran the wrong market on this one, so we're going to have to redo this. Let me go here, MCL. Cool. Let's try that now. Yeah, so that's what you're looking at. Can you run the tests on the weekend? Absolutely, and you should. Yeah, you should. I mean, you don't want to be doing that when you're trying to trade, obviously. So best practice would be Sundays, in the afternoon. You're done watching football, you took your nap, you're, get into the evening and just go to the computer and test out your markets, run your optimizations, get them ready for the week, save them, and that'll be what you deploy. So cool. Sweet. So let's run this one, and then we'll do some optimizations here, and we'll kind of go through examples. How do you do it? There we go. So this one is back. It still looks good. Yeah, cool. Couple losing days, but nothing too terrible. Good. So this one's already optimized. It's good to go. I think these settings were put together on the 24th. Okay, so let this be some hope that, you can sometimes put together settings that look like this, and then they continue to look like that, right? This is where we optimized. This is the net result of that optimization. This template hasn't been changed since then. So can it happen? Yes, absolutely it does. That was MCL on a 3 minute. This is MNQ on a 1,000 volume. This has been optimized for you as well. We're going to give you these settings. Okay. So if we go into here, we'll just take a look at some of the trades on something that's already been optimized, and then we'll go do some optimizations. So what we found in running this test and this market was that it was really good from 9:30 to 10. Was it good on other times? Yeah, but it was the best on 9:30 to 10. Also, a good bulk of the trades were coming in from 9:30 to 10.
That's Eastern.
And that's Eastern. Yeah, Eastern time. So this is really great settings. This is, the first half hour off the open. We can see there's our break of structure, pull back to the CWAP. There's the trade. It's right at the low. It just happens to be lining up like that. It's clean. It's really solid. So we'll give you this. This has already been optimized. Jeff and I did this over the weekend on Friday. So yeah, so that's good to go. But let's go ahead and go to we're going to go to, we'll just look at what the CWAP settings are. Just, some things that you might want to optimize. Okay. So if you're taking notes, take notes. I'll pull up my notepad here and we're going to start with, things to optimize. So we'll kind of look and then we're going to go through examples, but CWAP, swing strength would be something that you would want to optimize on the CWAP algo. You're going to find your standard number, right, for the swing strength. On MCL, it was 4. On MNQ, it was 12. Those numbers tend to be the best numbers. Could they change down the line as markets change? Yeah, absolutely. Yeah, absolutely they can. But you don't want to vary too much from this. If our swing strength is 4, then our range might be 3 to 6. Or even 2 to 6 is probably too extreme. It might even be 3 to 5. Like you don't need a very big variance. 12 might be 9 to 15 as a variance. You don't need too much of a variance on that. Okay, so swing strength is something that you'll look to do. Minimum boss line length was something that we found that really didn't do much for us. Okay, so really you could just leave it at 3, which is kind of the bare minimum. You can optimize it if you want, but we didn't find much benefit to doing that. Okay, so this is where I say, like, we've already done some of that for you, so we'll save you the time and trouble. CWAP deviation. So this is something that you could look to optimize. We found 0.9 to 1 was kind of the best settings for that. 0.9 to 1. Okay, those were the best settings for this algo. Your variance for this on your optimization might be 0.7 to 1.2, and you would optimize by 0.1s. And we're going to show you how to do that. As far as setting the variance, number that you change, that kind of thing.
Can I add one thing about the
Uh-huh.
deviations for
Yeah.
CWAP?
Yep.
So what that number does is it determines how wide that band is at the time that the signal happens. At the time that so because what it does is it determines two things. When price pulls back and touches the band, that's where you enter. Okay. And the other end of the band, which is the width, is the reference for how big the stop is. The stop is a multiple of that width. So as you make it wider, you're doing two things. You're making the entry sooner, like it doesn't have to pull back as far to hit the band to get entered. And as you make it wider, you're making the stop bigger. So arguably, it's probably the most important parameter because it
Mm-hmm.
really determines not only where you enter, but how big the stop is. And like Jim said, it's somewhere around plus or 1 plus or minus is kind of like the sweet spot. I have
Mm-hmm.
found that if it's anything more than 1.2 or 1.25, then the band is so wide that sometimes you don't even get the bars outside of the band before it comes back to touch it.
Mm-hmm.
So, but I think the point I want to make is that it's a critical component of how the whole thing works, but you don't have to optimize a very wide range of those values, but it's an important one to optimize.
Very
So
important.
just wanted to add
Another
that.
thing too with that is as you change things in your settings, there's a balance that it tips in terms of the different settings that you can change. So, for example, like he was talking about, the wider the band, bigger the stop. The target is based on a 1-to-1 R multiple of the stop in many cases. And so that's going to make your target bigger too. It's also going to get you in earlier if it's bigger or later if it's smaller. So let's say this is right here and that's our width. Well, we're not going to get in until here, which would have been a better entry. We're not going to know that until we go to the chart and actually physically look at it. Are we getting in too early? If that's the case, then we make it more narrow. If we're missing solid trades, like, maybe it's way down here and we came in here and bounced back out, well, then we're getting in too late and we would make it bigger. Okay, so you can look at that and kind of just visualize it on the chart to determine that as well.
Jim, can I add one other thing?
Uh-huh.
If you could bring the chart back up.
Yep.
So if you're using risk reward targets, In other words, whatever the stop is calculated at, then your target is a multiple of that stop size. If you're using instead the algo targets, now this is the only algo that has an algo specific target based on the pattern itself. So what the algo, and this is just for CWAP, what the algo based target means is that it's looking at the max excursion of price after the boss break and before the band is touched for the entry. And it looks at that distance, and you're setting the target as a multiple of that distance right there. So if you make the band wider with a larger standard deviation multiple, that's putting the entry closer to that target level, because that target level is set at the furthest excursion that price takes before it pulls back into the band. So it's another thing to keep in mind that when you use the algo based targets, the bigger the band is, the closer you are to that excursion, the smaller of a profit you're going to get. So it's a different way to do it than just a risk reward multiple based on the stop size. And a lot of the templates that are shared are using that algo based target, which
Hmm.
is specific to CWAP.
Interesting. Cool. Good deal. Ticks per cluster, you can optimize this. You're going to leave it at 1 for most markets. You can go up to 4 for NQ or MNQ. There's a lot of ticks. If you want to look at optimizing that, you could. But most markets, you're just going to leave it at 1. Max CWAP length after the boss break. For CL, this particular template, it didn't matter. I'm going to move this over here and move this here so we can see both. There we go. Let's do that. Cool. So yeah, so with this one, it didn't really matter, but on MNQ, it was very important to set this to 15 was the golden number. That was kind of the true north. And, you can look at anywhere from 10 to 20 on something like that. You can look at 20 and beyond if you really want to, but I would test it separately. You don't want to get too many iterations. So something like a 10 to 20, 15 was kind of the go-to number on that. MCL was different. Minimum bars outside. What this is saying is that you need, let me go back here to the trade. You need at least one full bar to be beyond the excursion to trade. So if this is our level here, none of these bars are beyond this this structure line until we get to this bar. So as soon as this bar is completely below, open, high, low, close below that structure line, that's when this algo is able to take the trade, and that's why that fired off there. Okay, so that's what that's doing. 1 was the sweet spot. You could set it anywhere from 0 to 5, but 1 was the sweet spot. Okay. By that I just mean not excursion, but structure line, boss line. Yeah, that's probably a better way to put it. So that's what that's doing. And like I say, 1 was kind of the number to go to. So that's good. So as far as CWAP, I mean, I would suggest, we've got these settings for NQ. We'll post them in Discord when we're done. Go ahead and run with these. We're not going to go through optimizing this because it's already been optimized. And so stop loss width, this is telling you, if we go in here, the stop, how far beyond the edge of the other edge of this CWAP do you want your stop to go? This set to 1.2 means you've got 20% as a buffer. So what it's doing is it's measuring from here to here. This would obviously be 100%, and then it's adding another 20% beyond that. You could set that to ticks or percent, which is really great. So a lot of options there. Make sense? I'm going to answer a couple questions here. Any benefit to adding the motion enter direction after CWAP hit? Although managed trades. Could be. That'd be something you'd have to do manually. We have it set to just trade the edge of the CWAP. That's always been the most, no pun intended, but that's been the edge. It's to trade off the edge.
Well,
So
if you wait for the next bar to close, then you might be entering at a less favorable price.
mhm.
It just depends. Oh yeah, it doesn't do that right now. So
Color coding engine, box backgrounds. No, because some traders might want to optimize those things. So when would you re-optimize the settings? Oh, the 1000 volume you need to do weekly. Yeah, it's really fast. It's like less than a minute. It's probably like a 30-second time frame. So it's pretty quick. So yeah, optimize it weekly. So those are some of the things that you could look to optimize. And what you can do. So I've got these settings pulled up. So let's go into optimization here for a second. I want to show you something here. So to make your life easier, let's say you want to weekly, you want to optimize swing strength, deviation. We'll go through some of these. Boss line length, we don't care. Deviation, we do. Ticks per cluster, we don't care. Max CWAP length, sure. We'll leave that alone. And risk reward, profit target, maybe. Start stop time doesn't matter. So let's do this. So we're going to go swing strength 9 to 15. Okay, that's going to give us 7 iterations because it's 7 different things to test. CWAP deviation. Let's just go 0.9 to 1 to 1. And we're going to go by 0.1. Okay, this is going to give us three more tests. So 3 times 7. You can do the math, it's 21, right? So we're already at 21 iterations, and you can kind of do this manually. Rumor has it there's a new platform coming out that calculates that for you, by the way, which is really great. Max CWAP length, if you do 10, now you're up to 210 tests, which is not a lot. But if you're going to add another setting on top of that, then it's going to start to get really big. Okay, so max CWAP length after the boss, let's just do 12 to 18. Okay. But the idea is once you've got all these parameters in place and you know what you're really looking, this you can test separately. You don't have to do that together. Do it separately. And then you just come down and you can set your dates and you've got them locked in there and you could save it as max net. I like to test by net profit and then look at profit ratios and drawdowns. And you can go to save. And now I can call this MNQ optimization template. Okay, so if I go in here and I'm going to go to template, actually, I'm going to pull up the right algo. I'm going to go to CWAP and I'm going to pull up load MNQ optimizer. Now, all of my numbers that I put in here are automatically brought up for me. I don't have to change anything. So when you're optimizing every week, all you got to do is scroll down and hit your dates, what dates, put your, mark it in and hit go. And you're good to go. So just so much easier. So much easier. If you know what your variances are and all that, definitely do that. Okay. So that's it for CWAP algo. I think we're good on that one. Let's go ahead and go to Springboard and then we're going to go to HFT. Okay. So let's bring up Springboard. No. Springboard, Algo. Let's pull up this one to start with. And what I like to do is just get it ready, pull everything up. I don't change anything to start with. Okay, I'm just going to pull it up and run it just to make sure I've got the right settings and everything is set accordingly. I don't want to optimize something if I don't even have the data or something's wacky, right? CWAP, we have optimized MCL and MNQ are good. Okay, cool. So this looks good. Let's go back to the analysis. Yeah, that's fine. So then we optimized this through the 2nd of February. And this was on a 1 minute on MNQ. Let's go ahead and see, what does it look like now? And do we need to re-optimize? Let's take a look. And Jeff's answering questions for us, so that's great. So let's go into Springboard. We'll start taking some notes here. I always like to take notes as I'm doing this because you never know, you might close out or whatever. So here we can see, yeah, okay, you did good for a few days there and then not so good, right? We've got a bunch of losing days in there. Clearly it needs to be optimized. So here's what I'm going to do. Instead of optimizing through last week, I'm going to go a week back. I'm going to go to the 9th. And what I'm going to do is I'm going to optimize through the 9th and then run it forward for a week. Okay. So the idea is we test 4 weeks. This is just my take on this. There's no right or wrong way to do it. I'm just giving you ideas. Test 4 weeks, run forward 1 week. That's the way I've always done it. And it works the best that way for me. So whatever you want to do there's fine. So we've got the 9th. So that's 1 week, 2 weeks, 3 weeks, 4 weeks. And obviously Martin Luther was 15th. So we're going to just do 16th forward. So that'll give us 4 weeks of data. Okay. And first thing I'm going to do is I'm going to run it again. And we'll just get our starting point. I'm going to save it, and then we're going to go in to look at it on Optimizer. And then we'll take notes on what's working, what's not working, what do we want to test, so on and so on. And I'm going to move this down so we can see it. Cool. All right, so we did good until, yeah, it was right about there. We had a few losing days. First thing I want to do is just go look at it on the chart. I always just start with the chart. What am I seeing? What am I not seeing? So on and so on and so on. This is set from 8:30 to 11. Okay, so here was our down move. We got the break right there. Took the trade. That was a stop out. Structure was down. Momentum was flat. So those are things that I'm looking at. Should I filter that way? Structure's down here. Tried to go long. Didn't work for us on that one. Let me check something on this one, actually.
Aha, you got
It's
them
not
backwards
it's
there.
not a filter yet. It's shown, but it's
Oh, I see.
that's not
Can't
required.
look at it. Yep.
You saw that though. We'll show you that, guys. It's kind of an interesting way to
It's
do
a
things.
hack.
It is a hack, and it works. All right, so we got 2 out of 3 that day. Let's go look at another day. Some things that I'm looking for as I'm looking at the chart. I'm looking at, what do my stops and targets look like? Are they too big? Are they too small? Too big or too small? Do they need to be adjusted? This one, the stop was above the level here, and it just got nicked and then went right to target. So something like that, you could say, well, my stop was too small. But you could also say, well, the entry was too aggressive because it didn't really give any follow through. Like it swept the level to get into the trade and then went against us. So the moral of the story on this trade is that the ticks buffer to enter was too small. Because if we hadn't traded that, we had waited until we got a bigger break, something like this down here, enter there, we take a quicker target because we got a better entry because we're higher up. Okay, so that's the moral of the story on that trade. We can go to the next one. So I'm looking at what do I need to optimize? I don't want to have to optimize everything. There it is again, got in too early. Okay, let's keep going back. The 1 minute chart, so there's a lot of A lot of candles to get through. Here we go. Looking at this one, I would say that one we got in a little too soon too, because it went against us first. This one, it's just, yeah, I mean, maybe too soon. Maybe it's just not a good trade. This one, we got in, it went against us again before going to target. So we see a common theme here with this, right? So that's one thing that I'm going to look to optimize here first and then go over the rest from there. So what we'll do here, I've got this. I'm just going to go ahead and save this again. And even though I already have it saved, I'm just going to save it again. This is, I just do this because it makes things smooth. I'm going to go to optimization, and it might seem insane, but I'm going to pull up the settings again. And then I'm going to go back to optimization. Template, load, MNQ. All right, stayed in there. Okay, whatever. Cool. So we've got really two settings for this algo. We've got minimum consecutive bars and entry offset. That's kind of it for this algo. It's very straightforward. Quantity, all of that. I'm not going to change this. I want to keep it at 500 per trade. All that's not going to change. Minimum allowable. I'll drop this down to 25 just because I want to see all the trades. Max, I don't care. Stop loss offset, we'll look to optimize that. Bars back for stop loss placement. What's that one do again, Jeff?
Okay, so this pattern is consecutive bars that have lower highs or higher lows, right?
Yeah.
So let's say you are requiring 6 consecutive bars to get a signal.
Mm-hmm.
Well, the stop is calculated if you're using the algo-based stop, it's calculated from the high to the low of that range of 6 bars in a row. So
Gotcha.
it's that range.
So it's the range of X number of bars.
But what if you are requiring 9 consecutive bars in a row, but you only want to use the last 3 or 4 bars as the range for setting the stop? So it just decouples the requirement for how many bars in a row to get a signal from how many bars to measure the range for the stop placement.
Mm.
And so, if you say if the requirement is for 9 consecutive bars, but you say 3 bars look back, it's only going to consider the last 3 bars to calculate the stop placement.
Mm.
Okay. And the other thing to say about that is that the code automatically limits the look back. Let's say you put the look back at 20, but your required consecutive bars is only 6. It's only going to look back 6. It's only the purpose of that setting is only to look back less distance than the number of consecutive bars. Does that make sense?
Sort
Did I
of.
lose you?
So with this, let's say I want to go, 10 ticks below this level, for example. Would that be enable algo stop loss or no?
Well, for that, then you would um, you look at your methods for stop loss placement. Bars. Okay, so let me stop loss offset type. Look at the options for that. Just up,
Oh yeah,
yeah, right there.
ticks.
Look at
Oh,
that.
okay, gotcha.
So
Okay,
it's either
that's
ticks
where it
or
is.
the percent of the range. So if you
Yeah,
say ticks, then it
yeah, we're
doesn't
gonna leave it.
matter. Nothing of that matters. But
Cool,
for percent of the range, you need to have a look back specified if you
sweet.
want it to be different than the number of consecutive bars for the signal. Does that make sense?
Yep,
Okay.
totally understand. Cool. So I'm just gonna leave it as ticks because that's way easier for me.
Yeah,
So that works.
that's valid.
Cool. So stop loss offset realistically is gonna be pretty similar to the minimum allowable because you're going kind of based on your expected range of the market. So I'm just gonna go by 25 and see what it looks like. Start and stop time, I'm not gonna change yet. And then I'm going to leave all the filters false the first time I do an optimization. Cool. So we are good. Got everything. Net profit. Now what am I going to do? I'm going to save it again. Now this becomes my optimizer. And yes, we were doing CWAP. Now we're on Springboard. Okay. So here we go. Let's go ahead and run our first optimization. We need to have at least one optimization, of course. So we've got minimum consecutive bars. Right now it's 5. So I'm going to go 2 below it, go down to 3, and I'm going to go up to 10. Entry offset. Well, we already know we want a bigger number. So I'm going to go 10 to 20. I'm going to go by ones. So this is 11 plus 8. So that would be 88 iterations. So that's fine. Minimum allowable stop and offset, I'm going to just leave those for now. Not going to change those yet. I'm going to run them separately. Okay, let's run it. See what we come up with out of these 88 iterations. And then we'll start to whittle away at it. Okay. What templates are made for CWAP? MNQ and MCL. So it'll take a little bit of time, so we'll let it do its thing here. While that's going, I'm going to go ahead and post the templates into Discord now, so you guys have them. Let me just rename them so that they're good to go. Okay, so now it's running the test. It's saying 13 minutes. We'll see what it does there. Maybe it'll speed up.
That'll go down.
Yeah, there it goes. It's already coming down. Mm-hmm. Okay, so those are in Discord now if you guys want to grab them. I don't know if you guys know this, but there's free algo training today. It's on the threads here. There it is.
There's a question about is there a written manual for how to do optimization? And the answer is probably just watching this recording is the best thing you can do.
Yeah.
But I'm glad that somebody asked about written manuals because we always include a detailed written user manual with every product that really goes through all of the settings in detail with examples. And a lot of the questions that people ask about settings is all covered in the user manual. And I know it's long document. They're usually 60 pages long. It's hard to get through them sometimes. It's a lot of detail, but the answer to your question about any setting is most likely going to be clear. There'll be a detailed answer in those documents. So, we put a lot of effort into writing those documents. So we highly recommend that you download those and have them handy to refer to them when you need to.
Mm-hmm. Cool, cool. Not a dumb question at all. Optimization is where you can run multiple back tests at the same time. The objective is to find out what the best setting would be for your parameters. So it's kind of like running multiple back tests at the same time to figure out which one's going to turn out to be the best. And the cool thing is you can run, you know, this might come back as a best of 5, but only when it's compared to a 15, you know. So that's the best way to kind of get it all done at the same time. All right, so we got our test coming back in now. Let's go to summary. I don't need to see the chart just yet. And we're on chart. Okay, we're just going to run with it. But I do want to see summary first anyway. Okay, 1.63 max drawdown 1922. It's a very good ratio of drawdown versus profit. I like to see that. 110 trades, good sample size. We've got 4 weeks of data, so that's a good number of trades there. Let's look at the equity curve. Looks good. A little bit of a drawdown in there, and then a little drawdown in there. Nothing we can't tolerate.
Pretty solid.
So that's cool. Let's go ahead and look at the chart and see what it looks like. They're in the CWAP thread, CWAP algo thread. Cool. So that one clean. Okay. Still took this trade. There was no avoiding it in that case, and we got stopped out, is what it is. Can't, weasel your way out of all of them. That one, what did this come back at? 18? 18 entry offset. So definitely went up quite a bit compared to where we were. Consecutive bars, minimum 3. Interesting. This one has a better profit factor, decent drawdown, and still good profit with a 5 minimum consecutive entry offset 11. So it ticked up 1 tick on the entry offset. 512 didn't improve the profit factor at all. So that was not worthwhile. Interesting. So 3 bars, huh? What we could do too is now that the bar sizing is lower, we could look at increasing the offset because there's less bars to contend with. That's an option too. Let's go a little further back and just take a look at some of the other trades. 1, 2, 3, quick. 1, 2. This is showing do I need to update probably. Interesting. There's one. Yeah, looks good. 1, 2, 3. 1, 2, 3. Yeah. Looks good. Looks good. Looks good. Yeah, I don't know. It's interesting. Doesn't look bad. The 3 candles has me a little leery, maybe, and like it might be too quick. But maybe not. Maybe not. This one, clean entry. I like this one a lot. It just didn't go. But I like this entry a lot, actually. This one looks good. That one looks good. Again, things I'm looking for, stops, targets. Did I get in too early or too late? Those are the main things I'm looking at.
So I guess what that one did was it increased the number of trades by reducing the consecutive bars, but it decreased the number of trades by increasing the offset. So you wound up with a similar number of trades and a pretty good profit factor. So I bet some of the other ones, some of the other iterations have longer consecutive bar requirements.
Yeah.
Right.
So let's just say, this is the settings we want to run with is the 3 and the 18. So now I'm going to lock these in and I'm going to go down to minimum allowable stop. And I'm just going to go 25 to, I'll just go 25 to 40, but by 5s. I don't need to get real detailed on that. Stop loss offset. I do want to optimize this as well. 20 to 40, 25 to 40 by 5s. And then that's really going to be it. So let's go ahead and run that one. It shouldn't be too many iterations. Should be 25 or so. Oh, 16. Even better. So the order for optimization is always going to be just starting with the algo parameters and then going in and viewing the chart. That's your first step. And then at that point, you kind of go to stops and targets. And then at that point, you go to filters. So it's always going to be in that order. And then you can kind of go back and forth as needed. Because changing one thing is going to change everything else. I mean, to some degree, but like we saw, changing the CWAP width changes your stops too. So it's a good theory, Michael. I like where your head's at. It's just way too complicated. Um, some of this stuff, it's like when we start doing all that, it turns into a black box, and it's not what these things are designed to be. It's just a matter of traders going in and seeing what they like. The MCL, yeah, that hasn't changed for the CWAP settings. Those are the same that were released on the 24th. Those are still good, so no need to optimize. Okay, so this changed nothing. So we're going to leave our numbers the same. That was still the best number. We had a little bit of a better profit factor by bumping this number to 40, it looks like. Let me see. 40 stop loss offset. Just bigger stop. Minimum allowable stop was 30. But if you have a stop loss offset of 40, then it doesn't matter anyway, because your stop loss is always going to be at least 40. So that number becomes irrelevant. So 25 is still a good number. So we'll just stick with that. 25. Now, I'm going to do something really sneaky here. And I'm going to show you something that is a bit of a hack. So now that we've got these dialed in, profit target, I'm just going to leave at 1-to-1. I'm, kind of happy with that. I don't think it really needs to change. We can go to the trades and look at them. Like, obviously that was a stop out. Target wouldn't matter. Same deal there. Profit target was fine. It was really good here. You're not really going to squeeze more out. If we had a bigger target, we would have avoided this trade. This one, again, it's a stop out, so target doesn't really matter there. This one came pretty close to target. This is kind of what I'm looking for. Like, did it get close to target, or are we leaving money on the table? This one went through target, came back inside. Could have got a little bit more, but not much. So that one's good. I don't see any reason to really change that number from what I'm looking at. This is MNQ on a 1-minute chart. Yeah, nothing there. So I'm going to leave that alone. Let's go down now, and I just want to double check our times, our half hour of day based on entry. Is there anything sticking out? No, they all look fine. Bulk of the trades are happening 9:30 and 10 o'clock. Makes sense. Most active part of the day. So that's fine. So let's go down now and look at filters and blockers. So first thing we have is moving average filters. We have a double EMA. Now, typically, your period 1 is always going to be a smaller number. Normally, you're going to do 9 and then 20. Well, what if you did 20 and then 9? Now, what we're doing is we're taking reversals instead of trends. Okay, so it's a bit of a hack. So if you want to take reversals, that's the way you want to set it. And it only works with those that have the double EMA feature. So what we're going to do is we're going to make this required and just see if it does us any good. And we're also going to optimize for the fast. And I'm just going to go like ultra fast, like 4 to 20. Well, go to 19 because otherwise it's exactly the same and there's no point. So we're going to do that. And let's go ahead and run it that way. So now we're going to be looking at reversals. While that's going, we have a sale on the algos on our website. Everything is on sale. All of our algos are on sale, 50% off. They're already discounted. You don't have to go in and get coupons, none of that. They're already good to go. So one thing to note here is that the pricing on the algos is going up across the board. Let's see, the thrust breakout we launched at $9.95 as a discount. That'll stay the same, but all of the other algos are going up in price across the board. So if you're looking at getting an algo, now's a good time to do it because they will all go up. The 748s on sale, we have them at 1,500. Those are probably going to go up to 1995. All of those, and then the HFT that's the best deal on that one. Yeah, any of these at 1,500 are going to go up to 1995 most likely. So get them while they're hot. They will be on sale all this week. Okay. And if you have any questions on discounts, that sort of thing, just send me an email. Benjamin, send me an email on that. Yeah, we're good. Cool. So just a nice little promo there. Give you the link there so that you can scoop up your algos while they're hot. Get them while they're hot. They're all good. I mean, you look at this like, we got a question, well, which is the best? It's subjective. It's whatever you like the best. It doesn't matter. Like any of these are going to be good if you optimize them the right way. So this is going to be, 12,000, 1,800 drawdown. This one, 6,000 with a 1,000 drawdown, less trades, right? And this one, this template was, let's go back to the summary, 8,000 with a 700 drawdown. I mean, looking at that, that's the best one out of the bunch. Is that always going to be the case? I have no idea. No idea. So, but yeah, so this still looks good. Let's go to the summary again. 12,000, 1.8, 1,800. The drawdown came down a little bit. Let's go back to the daily cumulative. No major losing days, so that's cool. Looks clean. 92 trades. We did filter out a few of them. A little bit better, actually, by filtering some of these out. Let's see if any of the drawdowns aren't really massively different. You could do a little bit better with this one, maybe, because you've got a smaller drawdown and you're not giving up that much profit. So you could look at this one too. Trust breakout just came out, so we're not going to re-optimize that yet. It's way too soon. Yeah, equity curve still looks good on this. What did these numbers come back at? This came back as a 7 and a 20. So I want to go to the chart and show you what that looks like. And let's go find some trades. Okay, so do you see how the fast is above the slow, but it took a short? Instead of going long, it took a short. So it's an interesting way to do things. The fast is still above the slow, it's going short. Slow, the fast is below the slow, and it's going long. In this case, that didn't really help us there. But we're seeing a little bit of better results. So if you wanted to use that as a filter to only take reversals versus trends, you can do that. And in this particular algo, it's an interesting way to do things because if you think about it, it's really a reversal signal anyway. So this trade was good already. And let's go back to another day. Yeah, see, there you go. I mean, just that one's a nice one. No, we did still take on some heat. That one started going up, kind of came back in a little bit. It's a little bit whippy. So what we're going to do here is I'm going to save this. And I'm not going to save it as my optimizer template. I'm just going to save it as MNQ, and I'm going to put the date in there because I think we had it good through like the 9th. I'm going to save it as through the 9th. Okay. Then I'm going to go back to backtest. And now all my settings carry over. The question I get a lot is, well, when I go from optimization to backtest, my numbers don't carry over. There's two things you have to do. At least one anyway. I do both just to be safe. Run the actual optimization. You can't just put the optimization in there and then save it and try to pull it up as a backtest. It won't work. You have to run the optimization. Then you have to go through and you have to save it as a template. Then when you go to backtest, it'll carry over. Okay, so just do both of those things and it'll carry over to backtest. Another thing I want to do now is I want to look at different charts just for curiosity's sake, because the 1 minute is kind of wild. It's not really, it's not entirely smooth. So I want to look at it on an 1800 volume as well, just to see if it's any better. Another factor to keep in mind is if you're using the moving average filters backwards as a reversal and not a trend, then don't use any other filters because they're all going to be trending filters and you're going to have no trades. So use trending filters or use the hack. Okay, not good. Like, no, like it's breaking even. I mean, cool. I'm glad it's breaking even. Let's go down in size and just see if that makes any difference. But it seems like 1 minute's the way to go on that. I got a lot of questions coming through on what's the bestest, most greatest top algo that's gonna make me the most money. Guys, I have no way to answer that question. I just can't answer it. It's they all work when they're applied the correct way and according to the way that you want to run them. My suggestion would be to run multiple algos. And I'm not saying that as a cash grab. I'm just saying that it's all about diversification, right? Some algos you might have a week like that. Other algos you might make 2 grand that week. So it's good to have multiple that you're running. So clearly 1 minute is a good market for this algo. Let's just look at it on a 3 minute too, just to see about the higher size. This is the springboard algo currently. We're going to go to HFT next. I will say this though, guys, as far as like, if, obviously the questions coming in of like, which is the best algo? Well, that's coming from a position of which algo should I start with? To that, I would say springboard, thrust brake, or CWAP algo. Why would I say that? Because they're the simplest to optimize and they give you great settings and all that you can run with. They're simpler to learn. So in terms of learning the algos, I would start with one of those. Yeah, no good on that one. Let's go down to 2 minute and then we're going to move on. But it looks like 1 minute's going to be the best on this one. Yeah, no, definitely not. 1 minute. Now, another factor you can look at is, well, if 1 minute is so much better than everything else, then are these settings, too good? Are they overfit? Well, you got to keep in mind that it's a balance of minimum bars, which is going to change based on that time frame. Those minimum, that the bars that are coming down are definitely going to change because now you're putting 3 bars into one. Another factor is entry offset's going to change. because it's a different time frame. Minimum allowable stop, stop offset, those are going to change because it's a different time frame. Your time of trading is even going to change. So these are all factors and why it's looking good on the 1 minute and not really converting over to the others, and that's fine. So I'm going to go ahead and save this now as an official template because it's been back tested and optimized. I'm going to save it as the 1 minute as 2.9. Now remember, we only ran it through February 9th. So here comes the ultimate test. And this is how I always back test. Again, it's subjective. It's my preference. It's how I do things. Um, what I want to do now is look at it for the week ahead. How did it do for that following week? And that tells me, do I have my sort of true north settings yet? Do I have my go-to settings yet, or do I need to continue to optimize? And that's why I do it this way. So yeah, looks okay. Um, let's see, what would it have done the following week? So we have the 12th, $14, down $14, up a little bit, down a little bit. Not enough to go, oh, I got to completely start over, but not enough to go, oh, I can't wait to run these settings next week. So I would go through now and looking at it for these dates and just go back and re-optimize at least these two. And so we can even do that. We'll just do that real quick and then we'll move on to HFT. Let's save as, what am I doing here? Yeah, I'm not going to save. I'll just go in and change the dates. So we'll go to template, load, MNQ. Actually, let's go ahead and load the 2.9 because this will be our new starting point, and we're going to go to optimization. And I'm going to go 3 to 8 offset. I'm going to come down a little bit and go 15 to 20. I'm going to leave everything else the same, I think. Okay, let's run it. Now, if the number is drastically different than what I got 1 week ago, then I might have to do some more testing. Okay. This is kind of, again, this is like finding your guardrails of where you want to be with your template. We'll let it do its thing. Yeah, I need to show that. That's a good call, Greg. Yep. Another thing that you can do while this is running, I'll try to show something else while it's going here.
Yeah, one thing you'll notice is when you're running an optimization, it's really hogging your CPU. So there's not a lot of things that you can do very quickly or efficiently while you're optimizing.
Yeah, exactly. So if you come in here, it finally did come over. So we go to show log. What this does is it's going to show you all the back tests you've run. So if you go, I can't remember if this was better than the last one or what happened, you can go back and look at all your back tests and see which one, you want to go with. So usually when I'm optimizing and back testing, I keep this up just so I can see it. Yeah, almost done. So our original settings were 5 and 15, and we came at 3 and 18, which is not that much of a difference. So now we'll see what we end up with here. And this will kind of help us understand what we need to use for these numbers. So let's go back up. So yeah, so 8 minimum consecutive went up. Entry offset 19. Obviously not too different because we didn't give it much of an opportunity to be different. Although I have no trades. I know why. Well, let's run it again. Net profit. That's why we gotta always check this stuff. I am running on MNQ. Okay, at least we're good there. Oh, I need to change the dates. Let me abort. Quick tester. Quick tester is totally different. Quick tester is used for manual discretionary trading to where you can mark up your chart and compile the data pretty quickly. You wouldn't really use that for back testing on these. Quick tester is really cool. I use it all the time, but it's totally different. You notice even when you hit abort, it still takes a while because I don't know what it's doing. It's sending the message to like the deep underground, underneath the pyramids, and it's got to go like way down under, and it's got to go through old like analog wiring and stuff, and it's got to get past like all the mummies, and then finally goes
Uh,
down and it comes back.
there's
So,
a huge amount of data that it's processing. It has to let go of all that. So it takes a
hmm
while.
I like my version better. I told you this guy's smart. He's way smarter than I am. Dang it, I did it again. I'm laughing. Everybody else is pissed. Hang on, guys. Bear with me. I got to change the dates. I got to thinking about Egypt and mummies, and this is what happens. Come on, killing me.
Yeah, drinking coffee is better than drinking beer while you're doing this.
Well, I wish I was drinking beer. Not yet, anyway. The meeting goes past 5 o'clock, then, well, I'm just kidding.
Have to take another 10-minute break.
Yeah, exactly. Yeah, don't optimize and trade at the same time. Absolutely do not do it. 100%. You will regret it. I promise you. Okay, now we're running optimization. Here we go. Good to go. We'll let that thing run.
Yeah, that's a good comment from one of the people is that, it's good to monitor your task manager and how much your
Hmm
RAM is being, because if you do some heavy duty optimization, your RAM used will continue to climb. And at a certain point, it's better to just restart an engine that it releases all that. It's just something peculiar to NinjaTrader. It just continues to accumulate RAM over time if you do a big optimization.
Yeah, I see how even mine, like I have a fairly decent machine and it's gobbling up all the CPU. So, and now it's coming down. So good to keep an eye on it when you're running back tests just to make sure it doesn't, go into that not responding. It says the analyzer's not responding, but it is. It's just actually no, it's not.
Does what your date is? Look, your start and end dates.
No, I was trying to bring up another window while I was running
Oh,
an
okay.
optimization, and now it's freaking out. Yeah, you can't really run back tests at the same time, multiple back tests. You really have to just do it through the optimizer. I think I crashed this one by trying to do that. Yeah. We'll give it a second to respond. If it doesn't, then I'll just close it down and get a new one. Things not to do while running back to us. Now we gotta wait for it to load. Um, you guys get the idea on that, right? Pretty straightforward. I want to move on for the sake of time. What I'll do is you guys now you know how to optimize it. So I'm going to go ahead and post the 2.9 settings and then you can go in and optimize that. Okay, so you saw kind of how I was doing that. So go ahead and run with it. I'm going to paste that in here. Okay, you guys can run with that. It's in the members area or the Springboard Algo thread. Sorry. Yeah, she knows better. I still got another appointment to run here later too, so. Eric, I would try the thrust breakout. I would try that one. It's a good one. For somebody just coming in on algos, that's a good one. Let me just close out the workspace here. Closing. Okay. All right. Yeah, actually, yeah, Grant, we started that and then 10 million other things coming on and then the holidays and so I really never got any further than that. It is something that I still would love to get done at some point. It's just there's so many variables involved with that too, as far as like what markets and time frames and that kind of changes everything. All right, let's go to HFT. HFT, you know me. All right, here we go. So I'm going to start with this one. Let's go into it. Good thing is we already got something pretty decent to start with. So we're going to go here and what was that, CL or MCL? It's probably full size. Yeah, full size CL. Go ahead and run that through. Get us started here. Yeah, see now my CPU being used is only like 10%. That's much better. So cool. Okay. So there's a couple things I want to show with HFT. Um, what I'm going to do here is pull up a chart on MES. And do I have one? HFT. Let's try that. Cool. Okay. So we talked a little bit about auto disarm mode, and it's something that came about as a result of trading on go here, Confluence, what is MES? Cool. This is something that came about as a result of trading live with the algo, and that's ultimately how we decided to go about using it. Um, so I'm bringing up a chart here, and I'm going to set this up for stacked imbalances. Um, that's the only signal that's on. It is set to intrabar. It's set up on MES 12 ticks. 12 tick target, 12 tick stop. Times don't matter. I can just ignore it because we're going to use the auto disarm. So see this little checkbox right here? We need to check that. By doing that, it's actually just going to eliminate the time from the charts anyway, or from the requirements. Show zigzag, fine. It's fine. Looks good. Go ahead and enable it. Want to check one other thing here. I will leave that off. Cool. Okay. Okay, cool. So here's the chart, right? So you notice, well, there's no trades. Well, yeah, that's because it's set uh, to auto disarm mode. So what auto disarm mode is going to do is going to show you the signals, but it's not going to enter the trade. Okay. So it leaves it up to you and your discretion as a trader as to when you want to go about deploying the algo. Okay, so here's an example of we're coming into EMAs. I already have EMAs on the chart, plus I have a stepping EMA here, which it's fine. Don't pay attention to that. We're just looking at these. So let's say you want to enable the algo coming into your EMAs, and you set it to short. So you just go in here and it's currently armed. So if you go short only, it's going to take trades short. You can hit disarm at any point in time. Otherwise, what'll happen is as soon as you take a trade, it'll automatically disarm. Okay, so it'll automatically do that for you. So let's say right here, we can't tell if we got a signal or not. Let's go ahead and refresh here and give it a second. Settings should be pretty close depending on the algo, Larry. Order flow can vary a little bit. Yeah, cool. Yeah, so this is a perfect example right here. So let's say, we know by looking at the chart, we know we're bearish. EMAs are down, market's coming down, it's stalling out down here, but it's getting squeezed. So what we have here, this is a little bit more advanced, but we've got a liquidity sweep. It comes into the EMAs, and then we get absorption on this bar coming in. Absorption is going to be, this is just for those of you that want to see an alternate approach to trading this particular tool. See how this is all green across the board? And it goes from all green, and then the next candle we get negative net delta. What that's doing is it's firing off the back colors of the chart here to show that there's absorption. Now you won't see that until bar close, but what you can do is you can train your eye to see, okay, we're all green. That means if I get negative net delta here, then that's going to be an absorption signal. And so you can set that. But what we can do here is as the market is coming up, we get the bullish close, all green. We know we're coming into the EMA. It's an area of interest. We know we're short biased. We just go to short only and we go to arm. Right now it's armed. And what's going to happen is as soon as this signal fires off with the stacked imbalances here, it's going to fire off that trade and enter. You're going to be in the trade, trading back into the lows. As soon as that trade is done, it's going to automatically disarm the algo for you so that you're not going to be entered into this next trade here, for example. Maybe you don't want to get into that trade. Okay, so this is a great way to use the tool. I have personally used it this way and had a lot of success trading it this way. It's another idea. Yeah, it's stacked imbalance would be the difference of the bid ask percentage, but over the course of multiple ticks. So we'll show you here for an example. Yeah, here we go. So here's another one. If we, zoom into this point in time right here, okay, market's up, we're bullish structure, EMAs are up, we're coming out of a rotation. Yeah, we're trading into some noise here, so it's something to be mindful of. But ultimately, we're pulling back to the EMAs, something we're interested in trading in this location. So we say, system, get long. And as soon as it fires off this signal here, it's going to enter that trade right away, and you're taking target there. Now, this one did not have absorption as a signal because we had positive cumulative net delta. And so but still, it's, good location. You can take that trade. We're coming up, coming up. Didn't quite make it back to the EMAs yet, so we wouldn't even look at that one. We came back in here, fire it to go long. There's the trade. Okay, so just another way that you could trade it. This is on a 10 range, by the way, and it's just set to 12 ticks. Now we've got a couple ticks as a buffer on the stop. We can go to another day and look at another day. Yeah. Didn't get the crossover on the EMAs yet, so we're really not bullish until we get into here. Once we sweep above this high, that's when I would look to say, yeah, let's go. And that one would have been stopped out by one tick if you had gotten in here. Personally, I would want to see it come down first. So this would have been the trade that I would go for right here. Okay. So that would have been the trade there. It's a great way to trade it. I actually don't like the stepping average. I just like keeping an extra 9 and a 20 on the chart, so that you can, really you're just looking at, are we making higher highs? Are your EMAs, is your fast above the slow? And are you pulling back into an EMA? Just set it to go long, let it do the work. Practice it that way if you want to try it as semi-automated. You can practice it that way for a while, get good at it, and I can promise you from personal experience, there's great trades to be had trading it this way. But you want to see trending markets. You don't want to see flat like this. That's not going to do you any good. It's not trending. It's going sideways, right? Are there winning trades in there? Yeah, but there's also losing trades in there. So just don't get caught up in the noise. Wait for the market to give you a direction. Clear breaks of structure, clearly pulling back into the EMA. We can flip it to short and look at the signal here. Oh, cool. Thanks, Jeff. So really, we're looking at this guy right here, right? Let's see if we got a signal on that one. We actually got one on this. So we don't know if we got a signal on this one because it was already showing us we would have entered a trade here. You're probably close enough to the EMAs at this point to try on something like that. And you can even have 3 EMAs and go, when I'm behind, when I'm above, let's just do this. I'll give you another example. So we've got a 9 and a 20. Let's add another EMA. And I'm going to show you another example. I'm just taking it a step further. Okay, so this is a 3 on the EMA, which is very fast, obviously. So if you are above the 3 and between the 3 and the 9, well, then maybe that's the time that you go, I'm going to fire it to go short. Structure's down, everything looks good. I'm going to fire it to go short. There it goes. Bada bing, got the trade. Moving on, coming down. We're above, fire it to go short. Okay. This one, the EMAs were squeezing, so maybe that is a good way to show that that it's too far extended. Something to play with. Maybe 3 is not the number because it looks a little wild, but try 5 or whatever. Anyway, it's just giving you additional ideas. All that to say, you can trade it manually if you want. Okay. Stacked imbalances, that's always been the best approach for me for that signal. Now let's go to the back test on this one. So this is crude oil, full size contract. Let's look at the numbers first. 1,500 drawdown, 8,700 profit. Nothing wrong with that. Profit factor, that's decent. Good enough. Decent profit factor or profit percent and 1-to-1 risk reward. Cool. Looks pretty good. Let's go to the chart. What do we got going on here? Scroll all the way up. This is the confluence signal and only the confluence signal. Here's my thoughts. If you're trading multiple signals, you want to trade delta divergence and trap trader, and you want to trade the flush reversal, and you want to trade confluence, you want to trade all those. Cool. Knock yourself out. My opinion from trading order flow for years and years is to trade them as reversals coming out of areas of interest. Sort of a semi-auto approach, but not really. This would be an example here, like we're, maybe getting short there. We've got some support here. Maybe we're looking to go long here, right? That would be my opinion on all of the other signals, delta divergence, trap traders, flush reversals, all of those. I'm going to move this out of our way. That's my point of view on it. Those of you that are familiar with trading with divergence can be a great way to fire long. And you can see there's a trade here long, right there to there. So you can look at something like that as well. Confluence is great in trending type of conditions, but you don't necessarily need filters. However, what I've done with this one is I've set max number of consecutive directional trades, meaning it'll only take 2 trades in the same direction before switching. There's your 2 trades in a direction. It's not going to take any more until you get a short. For confluence trades, I like that. And so I've got that set. I do have a stepping MA, but we aren't using it, so I'll just turn that off anyway. Zigzags are shown just because I like to see them, but we don't really even need to see those technically either. And then you've got your momentum filter down here. So you can look at, if you only want to trade confluence when you have momentum aligned, then that would put you into this trade getting long. You've got confluence and order flow. You've got your momentum lining up. Good to go. Not going to get as many trades, but you can look at that as a filter as well. This one, it's a great short. You don't have momentum yet. This one, great short. You do have momentum. So, up to you what you want to do there. But this is set to confluence signals only. So what this is saying is that all of this has to be green. If it is when the bar closes, it's entering right there at the bar close at whatever best price it's going to get based on the market order. So the confluence is great. So what it's doing is it's saying net delta has to be positive net delta. Cumulative delta has to be positive. And cumulative delta is going to be based on X number of bars. So the way that we've done cumulative delta is instead of having it for the entire day, which is pointless if you're day trading on a 10 range bar, I'm just saying, or a really small size bar, you don't want to look at the day because what happened 4 hours ago is completely irrelevant to what's happening at 10 a.m. after the equities open, right? So you want to look at it from relevant time. So you can set how many bars you want it to look back on cumulative delta. What it's going to do then is it's going to take, let's say we're right here and we're looking at a 4-bar look back. What it's going to do now is it's going to take 69 plus 93 plus 241 plus 222. Well, technically, if it's 4-bar, it's going to include this one as well. And it's going to add all those up. And that's where this number is coming from, that cumulative delta. It's coming from those bars adding up. So when you go from having negative net delta, negative, 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 we finally flip to positive. Notice the cumulative delta hasn't changed yet. So we only have 1 bar positive. Then we go back to negative, Then we go to positive net delta. Our cumulative still negative, but as soon as we flip here, we've now flipped the market from being negative net delta to positive. The assumption there is that when that happens, buyers are stepping into the market. Probably a good time to take a trade long. Now, do you want to trade only on that? That's up to you. But it's a valid signal. It's very, very important to pay attention to. It's telling you a story as to what's happening in the market real time and on a very micro basis so that you can make decisions on trading. Which is a really great signal. I love trading with Confluence. It's a good one. So that's what is going on. It's the only signal. It's on a 10 range bar. And really, the test looks great. So this is optimized through February 2nd. So let's go in. And now what I want to do is go to optimization. And we can look to optimize it through the 9th. And we'll go forward a week. Okay, so let's go into, I'm leaving stacked. I want to optimize for cumulative delta, look back, and percent. I'm going to optimize the look back from 3 to 8. The minimum delta, I'm going to go from 3 to 10. And then everything else is going to stay the same. Times are good. Max trades 2. You can optimize this. If you start seeing too few trades, you can, bump that up. I don't have any filters enabled currently, so we're good there. Let's change our dates. We're going to go through the 9th now. Again, we're looking at 4 weeks of data. Crude, full range 10, good. Got to change this. Don't want to optimize on data. Net profit. Okay. One thing that's really important with this one, do not use tick replay with this tool. It might seem like something you would need to do. You do not need to do it. You do not need level 3 data or anything like that. Don't use tick replay. If you do, it'll mess everything up. Okay. So let's go ahead and run the back test. We got 48. It's on crude though, so it's less data, so we should be a lot quicker. So Samir, let's see, after you get a full green or red, do you go long or short for reversal? Along with the number of factors, right? But yeah, that's the idea.
Boy, what a difference between crude and something like NASDAQ or something like this.
Oh yeah, it's
It would
way
take
different.
a lot longer.
Yeah. Okay, so here's our back test. 1.39. It's decent. There's a lot of trades. So odds are you could look to filter some of those out. Do you need 196 trades over the course of 4 weeks? What is that, 50 trades a week? It's like 10 a day. It's kind of a lot. Probably don't need that many. So you could look at filtering some things down. But yeah, so we got 9,600 with 1,800 drawdown is great. Let's go look at our equity curve. Recently, pretty good. Last few days on this back test. Yeah, nothing out of control. This is, by the way, this is risking 300 per trade. This is not 500, it's 300, which I like better. If you're getting more trades, you want to bring, this is up to you, but if I'm getting more trades, I'm going to lower my max risk per trade. Yeah. Cool. So good there. And so we came back at 3 for the look back. And then 4 for minimum delta. So lock those in. Save the template. I'm going to save this as 2.9. Saving. I'm going to go to back test. Should be 3 and 4. Cool. Good. Go ahead and run the back test real quick. Then I'm going to save it as a back test. And then we're going to run it and see what it did last week. Cool. Let's save it again. Right. Excuse me. 5,100 profit ratio definitely came down. So that's not a good sign, right? Had a pretty sizable dip. Now, are you going to let the thing go rogue and trade 1,800 and 2,100? Well, that's up to you. It's a net positive. But over the past week would have been down a little, down a lot, back to break even, and then down $300. So from the grand scheme of things, not terrible, but and here's the thing about algos. Some weeks are going to be great, some weeks aren't. And that's algo trading for you too. As long as you're profitable over the long run, which is what you want to see there, then there you go. Let's pull up the settings on 2.2. And what I want to do now is run it forward as well. And let's just look at it from the same dates. Because this was 3 and that was 4, right? Those changed a little bit. But I want to see if I just left it alone, would it have been better? And that can tell you that maybe you're optimizing too much or that you don't really need to.
Hey, Jim, are you using any filters on this?
Mm-mm.
Okay. Just curious.
Yep. See, this one really not quite as good actually recently. So yeah, you had, one decent day, but you look at the last week, down 900, well, down 600, 15, 12, 15, back to break even. So it would have been a break even. So, it could just be that that week was not great for this algo with this market. And that happens to us in real trading, which is why we talk about trading multiple instruments and multiple algos. So there you go. So let's see. Yeah, we can just run the same test on HG just for fun. I don't know what's going to come back, but I'll run it for you. Let's take a look. I'm just going to leave everything the same because they're pretty similar. If you need help, reach out to support, guys. We'll do our best to get you help on it. But at the end of the day, it's trading, Yeah, HG looks okay. Really more this month, which there's decent number of data, not a ton of trades, far less trades than crude. To be expected, there's not as many ticks on HG, but could be a good starting point. Yeah, could be worth checking out. In order to run successfully, you need to be able to trade same strategies or at least understand them. Yes, I think so too. I think it's good to be able to trade, to know what the system is doing, how it works, why it works, because the more you understand about your system, the more you're going to be able to deploy it in the right way. So high frequency scalper, honestly, you're just running stacked imbalances to do high frequency. I would say 10 trades a day on crude is high frequency. And that's my opinion on it. But if you want to do MES, let me go back into here. I mean, you can do all of them, but the best results you're going to get are going to be trading it. Let's do 940. Trading it kind of semi-auto. That's always the way that I've always run it, but to each their own. Let's go to MES. Range. Let's go full range. 10. Do that. We'll just run it for last week and I'll show you. You can get a lot of trades. Now, this is not going to be optimized by any means, but you can get a ton of trades. And you can, we would need to drop down the targets on these two, by the way, but give it a second to run. Cool. So did you guys learn something? Did you learn something of value? We've gone over a lot. A lot. Good. Whoops. Let me post that to everybody. Oh, good. Glad. Very, very good. This is intrabar right here. Intrabar. What did I do? Pick the wrong contract? No. Oh, I didn't have it set to long and short. That's why. Long and short. And there you go. Cool. Good. Thanks, Neon. Good, good. Cool, Benjamin. I'll get back to you. Yeah, we'll send out the recording later. We'll get that out to you guys later. Probably be later. It'll probably be tomorrow. Realistically, it's a pretty big meeting. It's going to take a lot of time to get it to where it's done downloading and all that stuff. So cool. Yeah, see 133 trades for 1 week. So you can definitely do that. And then what you'd want to do with this is you'd go in and you'd filter out. First off, you'd have smaller targets probably, and then you'd set filters, run different filters to get you to where you want to go as far as filtering out trades. So that would be the high frequency approach. If you want to scalp, you can definitely do that. Try it on MNQ as well. If you're scalping, that'll help you on commissions. You'll thank me later. Cool. Awesome. Guys, I've got to run. I've got somebody waiting on me. So got to run here. Yeah, 222 trades. There you go. So cool. Thanks so much. Enjoy the rest of your day, and we'll see you all in the trade rooms tomorrow. Come in and join. If you're not in the trade room, come and join us. You need to check it out. We're doing really, really well, doing good things in that trade room. So come in and join us. So,
Thanks for attending, everybody.
yep. Thanks, Jeff, helping us out. Just go to the main website, nstradingacademy.com, sign up for your free pass, and you can come in and check it out. Cool. Good stuff. Thanks, traders. Have a fantastic rest of the day. We will see you later in the week. We'll see you in the threads. We'll see you in the trade rooms, all that good stuff. See you on the charts. Go make some money. Good luck, everybody. Cheers. And we'll catch you next time. Take care.